Boom. Hello, everyone. Welcome back to the RationalInvestor.com's Weekend Frivolity. This is our Broiler Chicken Show. Buck, 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 buck. Why broiler chickens? I don't know. Why not? If somebody has a better title for the show, feel free to suggest, maybe in the comments. Long-winded, balding, middle-aged white man show. Well, yeah, I suppose that's not a bad title. So you gotta have fun at life. You gotta poke fun at yourself. You have to be humble, because if you take yourself too seriously in this game, man, you just it's just such a heartache. So just have fun with things. Anyway, it is about 20 to noon, I guess. 10:40 here on Sunday, May 30th. I guess coming into the end of the month here. End of May. Geez, almost halfway through this crazy 2021. We're making great progress on the site. Things are looking pretty darn good. Slowly but surely coming along here. I wouldn't mind actually starting to really ramp up sort of subscription pitches for the site. Can you use this information to help you make better trades, better trading decisions? I think so. I mean, I definitely will say that if you had heeded the crypto warning when breadth was up top here and it started to break down, I think you probably saved yourself a few headaches. And I suppose you can see right across the board, whether it be big stocks, even the commodities have come off a bit here. Big indexes are kind of just going sideways here, so I don't know, on balance, I think this information is helpful. And then, of course, actually I was pretty impressed with things like our crypto top 30. We did flash a little bit of a turn there, I remember, and if you watch my Monday to Friday shows there on crypto, we got a Bears cool your jets signal out of RSI there last week, and sure enough, that's basically what that rally looks like. The question now is, do we roll over and head back down and maybe even M out here and we have another leg lower? I don't know. I mean, breadth is getting awfully washed out here. So I wouldn't bet on a huge, massive move to the downside. But go play with those lows. See if we can freak the kids out a little bit. Sure, that sounds doable. Actually, it's interesting on the site right now. I don't know whether it's accident or what, but I noticed that a lot of people, and I even tweeted out this morning before I got the show going here, this guy here. A lot of people were passing this video around this morning in the lounge. Will, I think. I mean, I don't know this person. Please don't get pissed off at me if I'm shilling or, whatever. I'm not supposed to show this. You can see he's got quite a few subscribers, so I guess he's pretty well liked. 500,000 views here only in the past few days, so, geez, makes me look like a chump here on YouTube. But I did notice that this gentleman was going through a pretty classic stock market-y pattern. Richard Wyckoff. It's incredible how all this stuff, every cycle, it all gets recycled, and you guys all come back, and it's like every cycle there's a brand new topic, and now for some reason this cycle everybody's in love with Wyckoff. So, I don't know. It's not really that big of a deal, but I will say that this pattern is fairly consistent. It's the way the capitalist machine works, and I think that's probably the biggest how do you say this? The market itself is designed to do business. The market is not designed to not do business. All the market is just a coming place for people to do business. So ironically enough, this image in itself is nothing more than how do you generate business at levels? Run stops, break out to new highs, M tops, W bottoms, all that kind of fun stuff. It was a cute video, and people on the site were like, yeah, you know what, this isn't bad. It's not bad. And I guess he has a bunch of, I guess what he YouTubers these days are so good. I guess what happens is you put little markers in here when you're talking about different things, and you can see that they have it all broken up. So the only caution that I would give with this video, any TRIers are going to watch this, is you'll notice about halfway through, I guess, I think it was, you have to be careful assuming that anything's going to happen for absolutely guarantee one way or the other. Oh, damn it, I just had it on there. Where the hell was it? You just had an image there I needed you to see. Fudge! It was just right there! I hate that. Where the hell is it? Anyway, I know there's somebody who wants to get it. Oh, it's Khalid! Bye, Khalid! Hello, Khalid! Actually, I was in there in the ladies' lounge talking up Andrea. So impressed with Andrea. She just joined our little day traders room, so having lots of fun in there. But I wanted to show you. There's just one more image you gotta see here before I leave this topic. I don't know what the hell I did with that. Maybe that's it. Yeah, there we go. So some people are gonna get trapped thinking that this must be a Wyckoff distribution top, but what ends up happening is the goddamn market consolidates and charges higher, and it's another leg higher. So yes, I know a lot of people are going to be like, oh, if you see this Wyckoff top classic distribution, get ready, they're setting a trap here. Well, it doesn't always work that way, folks. And of course, I should do a lot better at presenting this. But like I said, somebody just shared this in the lounge. I think I watched a good portion of this, and I just wanted to mention that really what this is my bot setup. So any TRIers watching the site, like you'll notice the distribution top, you notice the one low, Brian and his obsession for 3 lows, right? 1 low, 2 low. Do we get going here, right? And quite often the bot entry is here, and on a test of the old highs, that's the move stop to scratch level. So if we run up, we test the old highs, but then we crap out, boom, you just walk away at scratch. Man, the market collapses. But what I'm worried about here is that people see this kind of pattern and go, okay, this is a top guaranteed to go down. Doesn't work that way, folks. I mean, don't get into the business of predicting what's going to happen. Just react. And, like I said there a moment ago, sometimes 1 low, 2 lows, 3 lows. I mean, I was funded as a prop crude trader going long here. And just not having an opinion. Market rallies up to the top like we showed the other one. That's usually where you move your stop to scratch. Then if the market craps out and it's a classic Wyckoff top, boom, you're stopped out at scratch. Walk away, have a nice day. But more often than not, believe it or not, these markets, that's a midpoint pivot. And the weird part about TA is that everybody and their brother wants to be able to, where the hell's that image, right? Call tops and say, this is the top. I declare the bull market is over. This is my prognostication. And you look fantastic. You look so smart when you're calling tops like a boss. But ironically enough, usually when a market starts trending, it stays trending for a very, very long time. And more often than not, you actually get this pattern that develops. This is just the trend continuing. Then it consolidates again, and then it heads up. And, you look at the stair-stepping chart, on any of the charts that I draw. What's the definition of a bull market? Bull market looks like higher highs and higher lows, right? Something like that. So the only thing I would add to this is that I have seen a lot of chatter about Wyckoff tops in here. And it's a great learning piece. Don't get me wrong. Add it to your repertoire. But it's not guaranteed. It's not guaranteed whatsoever. And, people at the TRI and at the TRI, that sounded kind of funny. You're going to learn, like trend continuation patterns that will try and get you in sort of like halfway through the consolidation If this is a trending market, you'll be long, and if it isn't, we hit, say, move stop to scratch, then you just get stopped out at scratch and, walk away. I'll say going short this kind of market is very difficult. Very, very difficult. You got to have balls of steel. And frankly speaking, I don't think anybody at TRI and anybody really in the public, I don't know whether you really want to even get involved in trying to pick off these kind of tops going short here. I would prefer that this breaks down through key support. Then on the counter trend rally, if this really is a top, we should do things like reload zone or underside kisses of this range, and I would short over here. So, also too, people on the site who are able to watch the day trader room, Daniele and Kiran are constantly dealing with these awful 5-minute charts, 8-tick range charts. 3-minute charts. I think Grim loves his 9-minute charts. So we see this constantly all day long. And you actually can judge the sort of health or ill health of a market based on whether these levels are taken out or whether these levels are taken out. So you can get, and Liz, I gave a shout out to Andrea earlier. She's in that day trader room every single day. You want to get good at trading these kind of movements here. Hop in the day trader room with Kiran and sharpen your sword. Very, very pro him and Daniele. So anyway, I saw that being passed around the lounge this morning. I wanted to comment on it. It's a cool piece, don't get me wrong. But just be careful. Nothing, of course, in this market's written in stone. And also something that concerns me a little bit here, as I said, is that a lot of people are watching this. And a lot of people are talking about this on social media. A lot of people are like, oh my God, did you see that? Did you see that? Okay, now we're going to be watching that. And what ends up happening is when everybody and their brother is watching for one particular thing, what do you think the odds of that thing actually working are? Not so much. So this gentleman even says himself, he says, because so many people are going to be watching for this, it might mean that it's actually susceptible to be manipulated itself. So just be forewarned. Of course, when I talk to you guys, what I try to do is I try to say, enough of the shill, enough of the fluff. What's a real trader's life like? 30 bloody years in this business. And really, you know what a trader's life is? It's all about just making damn sure you're able to come back and play the game again tomorrow. And, you're not going to be... Don't get into the prediction game. It's just not worth it. Take your small bets, take your shots. If you're right, make damn sure that the market pays you a good chunk of money. If you stepped in there and bought Bitcoin at 3,000, 4,000, even 5,000 last year, if you sold at 6,000, it'd be like, oh, what a waste of time. Now here it's 30, 40, 50, 60,000. Well, for God's sakes, I sure hope you're paying yourself a little bit. And ironically enough, this is the only business when stuff goes on sale nobody wants to buy. But when stuff is ridiculously overly priced, for some reason everybody and their brother wants to buy. So, okay, started off on that, a little bit of a funny tangent there. And ironically enough, I would say probably that Wyckoff image, that Wyckoff conversation is really the market state right now. It's just a train wreck mess, eh? And unfortunately, as technicians, this is what ends up happening. Is you keep writing lots and lots and lots of notes, and after a while you go, I can't even see the damn chart anymore. But I think probably actually this one little study down here was everything that you really needed to focus on. Maybe why don't we see if we can, I don't even know, maybe we can do a brand new chart here. Just do it from scratch for you. Look at this. Oh my goodness. Anybody want to get fucking rich trading? This is the kind of market you could just get stinking rich. I've been waiting goddamn 20 years for this goddamn market to get back into a growth market. Oh my goodness. So here's a great example. Lions Group Holding. What the fuck is this? When Zach found this for me, it's so perfect. Number one. And actually, I think maybe. I mean, I don't know. Should I go off on this tangent? Maybe I should just leave this alone. Man, you know what? I'm not gonna go there. This is a great story, though. It's so perfect. So somebody remind me in the Daily Brief, because we really shouldn't be touting ideas on public YouTube shit. But somebody remind me tomorrow in the Daily Brief to talk to you guys about this. This trade is just so perfect. It's ridiculous. And it's so perfect for this environment. It's just great. So, okay. What I wanted to do is go BTC USD. And we will go Stamp. Is Stamp still sort of like the go-to place for the cash market? I hope it is. Interesting. We got a bit of volume that came out here. That's not bad. A little bit of interest to do some business there. Okay, and then we were going to do indicators, RSI. And actually, you know, Julian's created a really interesting indicator that he's been working on. It's sort of a background color indicator. That if you haven't been on the site in a bit and you're kind of like, hey, well, I haven't watched too many of the daily briefs and stuff. He had a really cool baby powder report on Thursday. So he's working on another one of those background scripts. We had one, I want to be a day trader. It was nice, simple, just change the color of your background screen depending on whether the market was trending or not. And as I said, and actually I was pretty impressed. A lot of people on the site were like, ooh, I want to learn more about that. So anyway, if we just look at this on the simplest expression or simplest term, you know, probably the way that I want to just be succinct in the message that I want to try and convey to you guys, because I get so scatterbrained when I talk to you guys about this. But rules of thumb. I mean, are you here to be a part of the cool kids lunch table, or are you here to make money from trading? And I can't answer that question for you. Only you can answer that question. Quite often, interesting, there's something else on here. What the hell is that? Oh, hey, look, hey, it's Brian. Hey, you should do something. Hey, you should do something. You should do something. And you can see, fuck it, I don't feel like publishing anything anymore. I haven't published anything on TradingView in forever. Anyway, if you're here to make money, and I mean, it's so cliche. I mean, this is ridiculous, people. You'd think that after a while somebody would go, yeah, you know, you're right, we should just make a rule. People in the public, you're not allowed to buy until you get back to reload zones. But no, I mean, it never fucking changes. So this was the market that I first came into, and I remember I came to the Bitcoin community right here, and I watched some clown on like Good Morning America literally hold up his Bitcoins to the camera, and somebody stole his Bitcoins right from him, right on the show. That was my initial introduction to Bitcoin. It's probably actually over here. But you can see, and I told the community, usually bear markets take about 18 months or so to happen, and sure enough, I mean, it's kind of shocking how cliche this was. From top to finish, 402 bars, 365 bars in a year, so that was about a year and a quarter. And by the time we actually broke out, that was just a little under 2 years, and then we're back in the bull mode. So, very cliche. The problem, of course, here is you try and tell somebody maybe not a good idea to be a buyer up in this area here. Maybe you should just wait for reload zones. The interesting thing about reload zones is you could have bought here, and I would have been perfectly fine, back here. Well, that's basically the same price. You didn't do anything for like a year and a half, right? That's sort of like that little old lady approach to investing. Just nibble away. You just got to make damn sure you're at or below reload zones. Don't buy when it's way up here. Next cycle, same thing. Same shit, different pile. Nothing changes here. It's so cliche. So, unfortunately, this was when orange-haired toupee people were running around. And, everybody and their brother was just absolutely insanely bullish through here. And actually, we even saw a little bit of that recently through the crypto market. When you see the market that looks like this, you got to have the patience and discipline just to leave it alone. Once we get back into reload zones, all right, well, I can start nibbling away. Last year we got an absolute gift. And, real pros on the site, and I would imagine a bunch of pros in the crypto community also. Got one hell of a buy window here. These don't happen every day. It's just what a gift. This was even a reload zone within a reload zone. Holy Jesus. So that, in my opinion, was like a gift from God right there for anybody who actually had the balls to step in there. But, same sort of conversation here, right? You get these big sort of orgy face rip moves up. I remember when this happened, there was one gentleman on the site who actually came to TRI through this. And, he was trying to learn. He was trying to, and keep in mind in a bear market, it's depressing as hell to sit here and have to go through this. And I remember when we were going through this, because ironically enough, this move here is exactly opposite to what all this is. Right? Watch this. It's shocking. I don't know why more people don't pick up on this. 61.8. Yeah, we even call that level Mountain Man. Good old Brandon. Right? Doink. And we'll put a Mountain Man right here. Doink. Oh, here we can put one there. Right? Doink. Yeah, we'll put a Mountain Man there. Doink. You can see how often the market likes to trade back to Mountain Man. So, I remember when this happened, man, the emotional octane around TRI was very high. Because a lot of these people that originally got back into the market here, they were finally given the opportunity to release themselves. But, of course, they were riddled with anxiety. Well, what's going to happen? And then, just like we did over here. And just like we did over here. No difference. Through this part, you got to kind of go, well, you know what? Maybe I'll just cool my jets and wait for reload zones. So, here we are again, folks. Nothing ever changes in this. It's kind of funny how cliche this is. So, there's the top end of the range. There's the bottom end of the range, and there's your reload zone. I suppose the good thing about this is, crypto enthusiasts should take away from this that there's a pretty damn good odds that we're not going back below 10 G's anytime soon. I mean, you can see in this one we just dipped down into 88.6, but that didn't last very long. And in this one, you can see we just dipped 78.6 down into, didn't even hit 88.6. Consolidated, that didn't last very long. And this one, right, 78.6 just dipped down into 88.6, but that didn't last very long. So, put it all together, I'd say there's pretty damn good odds. 10 G's is probably our floor here for, maybe in the next 5-10 years. Who knows? And also, too, that would make sense as well, because through here, we said that the cost of production was about $2,500. Then they did a halvening. So then that should jump up to 5,000. My hunch is, next halvening, that jumps up to 10,000. So, there's your 10,000. There's your 88.6. And that's kind of like this conversation. You can even see the S19s and the S17s are slowly climbing the wall of worry. And my hunch is by the time we get through this cycle and we get on to the next bear market and clean up before the halvening event, blah, 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 we'll be swimming somewhere down in this area here. The only question, I think it's probably more... where's the best place to show you that? I think I have it over here somewhere. The only question I have right now is all these kids, of course, with their stock to flow models and all that kind of stuff. Do we continue along these parabolic curves? And I don't know. I'm still kind of on the fence over this. I think that the coast to coast. I did this study here recently. I think this is a good chart for you to see. Usually takes from bottom to top. These do often take about 1 year, and it's quite shocking now. And especially when I first put this out, people are like, "Fuck you, you're an asshole. Fuck you, fuck you." Man, it's incredible how emotional people get over this goddamn Bitcoin. It's incredible. It's like, yeah, it's like they like you're not even allowed to speak your mind in this space, and that's one thing I absolutely hate about this stupid 21st century is you're not allowed to have an opinion anymore. Fuck you. Fuck you. Can I say it a couple more times? Hey, Alexa, fuck you. Or what's the other one? That's going to really screw people up when they play it back. Eh? Siri. Yeah. Siri, how do you fuck you? That's going to really screw them up. Who cares? I don't care. Maybe it is a public show. And if anything, I hope you people in the public are watching this, I hope you all respect my irreverence. Because, no offense, there is no reverence in this society. There is nobody I actually look up to and go, you know what, that person is worthy of respect in our society. Nobody. Not a single fucking person. Which makes me sick to my stomach. Alright, back to our story. So, I don't know if this is going to play out like typical WD GAN kind of stuff. Why can't I show that? What's going on here? Anyway, I wanted to maximize this, but I can't seem to. Where's the little window there? There's that one there. Oh, that gets rid of that. But how do I get rid of the... Oh, no, that's not what I wanted. I want to show you this one. Oh, I see. Let's see what we got here. Like that. There we are. So typically, what happens is you get these sort of like 1 year coast-to-coast moves, and then according to WD GAN, this market should correct 50% of this move in about 50% of this 365 bars. So is that 183 bars? I'm terrible with math. Does anybody have a calculator? I think that's roughly half of 365. 365 times 0.5, boom, 182.5. Yeah, I got it. So there's 183. So ironically enough, I would actually say if this market was healthy, that we should be sitting at 32,815 somewhere around the middle of September. So that's the irony of all this. I don't think it's going to... This is the path that it followed. I think that this was... Well, I'm not even quite sure where I got that data set from. But I think that was a typical sort of previous correction. One thing I was showing you recently, and I do like this thinking. The problem is I got to find the damn chart. Is that 4 year 4 year thinking? And I also too I have a bad habit of letting time just slip by here, and an hour or two slips by, and I'm sure you guys probably don't like this very much. So I'll try and be as quick as I can with this. And we'll move on to the next one. Geez, look at, there's so many of them. I don't know which one it is. I always make this mistake. So there was the coast to coast one. It might be this one. Yeah. Is this everybody? Yeah, it is. Good. So, this is that 4-year study. What does Bitcoin do every 4 years kind of idea. I took the 2017 bull, that's in teal. The 2013 bull, that's in yellow. And I do believe Ethereum looks awfully like this 2013 bull. And I just overlaid them. What kind of price action should we expect? Sort of that thinking that we pivot sometime around September. And actually this right now is that 33,000, is that 50% level. Believe it or not, what that says to me is I actually think, probably over the next 6 months, we're just going to be like that. Going to drive you crazy. Should be lots of, those Wyckoff checks, little dips against these lows to drive people nuts. But I don't really think we're going to go a hell of a lot lower than that. Like I said, this actually, I've said this before. If you actually get this straight line dip down into mountain man levels kind of idea, and maybe it'll be easier for you to understand this if I change that to a regular chart. But I do have bids working at 25,000. So, if they want to dump this thing down into these levels, it's just, I don't think it's going to happen. Actually, I guess we can go there now, And, things like Ethereum, I had said that, if you can get dips against mountain man levels on Ethereum because it was straight up and straight down, that's a buying opportunity of a lifetime. I think I had that, let's see, where is that? That's over here. And I still got my bids working. So it's not like anything's changed there. I actually do kind of like the idea that, I don't know where this tops out. According to that distribution, accumulation distribution model, we should probably wash these highs and then one more dip down below. And I'm telling you, man, anywhere in this area, in this green box, that is a buying opportunity. That, in my opinion, is the load up. That is the level to be accumulating. If anything, the way I would look at this is I would say that this is your big honkin'. You got to change this to like a monthly chart now to see this. Let's go 2 weeks. There it is. So this is your big W. Down, up, down, bring it, woohoo! So all you Wyckoff check fans, there is your Wyckoff check level. And like I said, we just came screaming straight down in here. There's that Wyckoff box. There's the green boxes. Man, you get any kind of W's in here, just buy the shit out of that. That's sex. Pure, raw, unadulterated. No, it isn't. It's cryptocurrencies. What are you talking about? Caveat emptor. Of course, I couldn't care what you buy or sell. It's your money. In fact, actually, I was talking to a U.S. lawyer, and she's like, "Are you sure you're not an investment advisor with these people?" And I said, "I don't care what they buy. I don't tell them what to buy. Don't tell them what to sell. Don't care. I tell them, I teach them the process. If they want to learn the process and they get good at running their small business of trading, that's my job. Teach them the process." So, and you all know this. Let me say it every time. This isn't financial advice. I'm here just trying to tell you what I do with my money. And as an investment advisor, I used to have to follow the process with all of my clients, or they wouldn't be clients for much longer. That's basically what I teach you here at TRI. If you want to follow along and learn, you're more than welcome to join us. And I think a lot of people get good value out of the product that they buy from us. So I think it's a win-win. But I'm not going to tell you what to buy or sell. Am I buying Ethereum here at $2,500? No. My bids are down here in green boxes. You all know that. Interesting. Somebody there over YouTube doesn't think Ethereum will survive past a decade. The great part about what I do is I don't really care. I mean, maybe yes, maybe no. I'm here to put myself in a position that if it does perform, Awesome. And, I think I bought Ethereum. Jesus. Again, you know where I can show you where I bought Ethereum. Might even be on this chart. I bought Ethereum. Mind you, I think I bought it versus Bitcoin when it first came out. Somewhere. Here it is, way over here. So, I don't know, can you see a letter of the alphabet down here? Right here. Down, up, down, breakout. Right there. So can you see that level? Who is that? Sella? How do you pronounce your name? I don't know how you pronounce your name. Sella, the Oracle of Yot Neb. Wow, there's a name. Sella, the Oracle of Yot Neb. I don't really care what happens in this space. If I can go and pick up a little bit of this, of Nanny Nibbles, little old ladies kind of idea, I don't even have to worry if this even goes right off the board. I don't even care. But you tell me. If I force myself, this is at $8.50. If I force myself to sell half of the position at, what's that, 17? So that's in there. And we can even use fun little things like fog and bones to help us see those targets if you want. It's up to you. I mean, this is a fun little special treat. Look at that. So sweet. 1566. Wouldn't have got you a double there. But definitely like working those open orders. Interesting. Underway. Would have thought that would have been a little bit higher, but that's okay. No big deal. Then in years gone by, I used to do like well, actually we could do reload zones. Probably looking for some resistance up in this area. But, let's just use this, right? Nice, simple. Buy the double bottom, sell half on a double. Do I really care what happens after this point right here? Whether Ethereum gets taken over by Netscape? Not really. And let's see if we can even see that on the chart. Where the hell is that? I think it's down in there. Yeah. So you got your double there. Yeah, I guess right down in that area there. So would it have been in our business, in our best interest, even to call a top through here and say, this is it, the bull market's over? Well, Jesus, missed all that up there. So I'm more the type of guy, I want to put myself into a position, see if I can get some of that free coin, free positions, and then we'll just see what the hell happens. If you want, if you're selling into this rally, great. Try not to sell everything. If you want to reload when the market comes back down against the bottom, you want to buy again when big honking W's come in, just make damn sure to let some go when it doubles, right? Same old, nothing changes. And you're still long. And hell, you might be even just slowly spoon-feeding the market as it's moving higher here. That's the way I approach the market. And, I see you guys over there talking about things like Netscape. This Sella says he's calling a top on Ethereum and there's no point in investing because it won't be here 10 years from now. Think of Netscape. Well, and you can also think of Apple Computer. I mean, there's plenty of people that called Apple Computer in the 1990s exactly the same as Netscape. So my approach is don't get into that business. Why even bother? Why even bother? It's such a waste of energy. I mean, if you can grab some of the asset off of a W, sell half on a double, throw the free shit on the pile, move on to the next one. Who cares? If it goes to the moon, great. All right, more Lambos. So a slightly different approach to capitalism there, Sella. But, this is what makes a horse race. There's no right or wrong to do it. I just try to keep as much hair on the top of my head as possible, and man, I'm losing it quick. So I want to try and be as least stressed out as possible. let's come back to our story here. I think, like I said, lots of people talking about Wyckoff distributions. I will say, please, and man, we saw this through the whole damn spring. If you see relative strength index moving to new lows and the price of your asset moving to new highs, you got to respect that. That is what we call divergence. It's not a good sign. And really, this market isn't really even healthy, and it can't move higher until this thing starts Wing out and making higher highs and higher lows. Right? Even something like this. Right? Just show me some sort of higher highs and higher lows. A little bit there, but geez, man, when these fast lines break, you better run for the hills, eh? So, kind of a negative backdrop. And I do remember I was talking with people in social media and stuff like that, even old students. And I must have sounded like an old fuddy-duddy idiot. And I'm sure there were people, young German men full of testosterone, going on YouTube and fucking just almost like having orgasm on YouTube while he's doing the video. He's so excited. But man, I don't think that was in people's best interests. And you listen to the old fuddy-duddy go, I don't know, cool your jets, reload zones, W's are important, that kind of stuff. Fuck you, Beamish. You don't know what you're talking about. And then, you get the market break like this after the fact, and then I can't sit there and go, I told you so, I told you so, I told you so. Good comment, Carlos. That would make you orgasm, wouldn't it? Those damn referrals. That's some serious referral bacon. Yeah, I'm not going to comment on that, eh? Anyway, so the point here is half of what I do is I actually try and talk people out of doing shit. Stop, don't do it anymore. Don't chase. But I'll tell you, that doesn't sell subscriptions, does it? Mind you, I gotta say, I'm pretty damn impressed. There's a lot of you that came and joined our school. So it must have been doing something right here. I don't know. I mean, I guess you guys find value in my old fuddy-duddy ways. So, anyway, just looking at that image, if you're watching this for the first time, you want a really, really, really simple way to keep yourself out of trouble. If you ever see the market smiling at you, it's Joey Diamond getting ready to take your money. And what sucks is that guy's now coming out and he's saying, this is going to end badly. You're all going to get screwed. And then, if you listen to Yahoo Finance, who the fuck is Yahoo Finance? I mean, yeah, you can understand this. It's going to end badly. Because, the headline is 10 cheap cryptocurrencies to check out. Who's saying Doge is cheap here? What? I mean, it doesn't make any sense. First off, who is actually coming up with a value metric whether to actually tell you whether Doge is expensive or Doge is cheap here? So, if we leave this world of cryptocurrencies to people, and this is like Yahoo Finance, these guys are the worst. Because these guys, this is like bubblegum, Barbie girl, what's some of the funny kid music people these days? What's that, Gaga, Lady Gaga? Lady Gaga, this would be her world, right? And you read through this, these articles are absolute fluff. I mean, it's like, okay, 59 cents. What the fuck is 59 cents on a Dogecoin? How do you even value a Dogecoin? And I hate to say it, from a guy's playing this game for 30 fucking years, There is no value to Dogecoin. Maybe like a fraction of a cent. So how do these people come out and say that it's cheap at 59 cents? Where do they even come up with a valuation what one Dogecoin is even worth? Nowhere. So if it's like that, then yeah, this Cox... and this is what really pisses me off, is because he's going to be proven right. Because this is bullshit. Yeah, it's exactly the same damn thing. So he says, remember CNBC? How do you buy XRP? Oh, how do you buy the top of XRP? Oh, just watch us. We'll do it. Not, how do you actually buy value, or how do you make a good investment decision in the marketplace? Oh, we're not going to bother talking about that shit. Is there actually any value to any of this? No, shh. That is not the conversation to be had today. So, I mean, the worst part about it is this guy's he's going to be proven right, because this is just getting stupid again, right? It's just getting stupid again. Drives you nuts, I tell you. And this is the problem with capitalism, is nobody's stopping this. It's kind of weird, like I'm considering doing, I'll tell you guys on YouTube, I'm considering creating sort of a physical location for TRI, and I would like to have everybody at TRI participate. This is kind of cool, like a campus. Then you get into, I want to raise capital instead of just doing it all myself. And I want everybody at TRI to participate. And then it's like, the lawyers get involved. And it's like, what, is this a security? Right? All that kind of shit you have to go down, right? Just such a nightmare. But the irony of all of this, and why I'm mentioning this, is we live in a really weird society right now. There are no rules. And this guy here, he's breaking all of the rules, right, left, and center. But especially within cryptocurrency, there is no rules. There is no rule book. So if there's no rules, this guy can go. He knows what all the nasty Wyckoff, distribution, accumulation, pattern, market manipulation. I hear over on YouTube you guys are saying that Crypto guy is now blaming the price falling on market manipulation. Well, this guy, he is Captain Market Manipulation. He knows exactly all of the strings to pull to get you to act emotionally, and he is playing I'd probably say maybe a good 10 to 20 million people. He is playing them like a fucking fiddle. Cocksucker. Oh, I hate these people. I hate how our society has no rules for any of these people. They're just running around like it's a fucking Wild West. There's no rules. None. Is that the coming sign? I'm a psychopath? Yeah, I hate to say it. Especially with all the online video games and stuff like that about killing and stuff like that. I actually get the feeling like the 1% is setting us up so we have to go through one of those, U.S. Civil War, like 500,000 men slaughter each other in like 2 or 3 days. It's like, wow, what the fuck happened to this human species? Or, World War II, Hitler fucking kills 6 million people individually. Stalin and all his shit in Eastern Europe. Mao and fucking forcing millions of people to starve to death. I got a funny feeling we got to go through one of those kind of periods of stupid, silly humans. Anyway, okay, I got to get focused here. Sorry, everybody. I always do this with you guys. I get all fucking worked up. If anything, if it's one thing when you watch these YouTube videos and stuff, at least you find that... And actually, I did a... Kevin, are you here? I don't know whether you're here or not. I did an interview with your Bagra buddy. Bagra! I'm going to be famous in Turkey. They're going to be coming after me with pitchforks. But halfway through the video, I actually broke down. I started crying. Good. When was the last time you ever heard of somebody actually giving like a financial counseling interview and the guy starts crying halfway through the interview. Oh man, I'm such a weirdo. I mean, like I'm real. I'm about as real as it gets. No, I don't think. Was I ever on that show? Fuck, I hope I wasn't. Was I on that? My Mr. Note Taker, Great Delumiti. I always butcher your name. He said I was on their show. I don't even remember. Maybe I was. Must have been a long time ago. I was actually on their show? I don't remember that. Wow, that's freaky. I didn't even know I was. Find the episode for me, please. Refresh my memory. Anyway, okay, so what I'm supposed to be doing here today. Sorry, everybody, I kind of wasted an hour there. What I'm supposed to be doing today is I'm supposed to be talking to the level 1ers. They've got such a heavy load to get through here in this level 1 program that I think it's a good idea. We got the pre-recorded lectures that I did years ago. We've got Grim in there doing Q&A and office hours, and I'm supposed to spend time here on Sunday just doing any follow-up questions. That stuff it's just so thick that it's impossible for us to get through without at least 4 or 5 attempts. So, last Broiler Chickens, I actually had a number of questions left over, and we actually spilled this over into the daily briefs, and I think we finally got through all of them by about like Wednesday or Thursday. So whoever asked, if you're just watching now, if you didn't see them, go check out the daily briefs through the week. I was rather upset at myself that I wasn't able to get through all the questions, and so I forced myself. Unfortunately, I actually kicked Kevin out of his slot on Wednesday, so he wasn't able to do a TRI SOF summary. But it was actually kind of cool. We actually even walked through how do you do fog and bomb analysis and chaos levels, and a couple OGs on the site, Braff and Bobo. They also had a contribution that I'd forgotten about, but it was on the site, so we also added that. So actually, in a weird sort of way, it was cool that we were able to take some extra time to answer these questions because we even went a little bit further deep. So, okay, so if there's something that we can spill over into daily briefs, I will, but I would like to try and get these questions addressed here today. So let's jump into this. Level 1ers right now, I think they're on the on Fundamental Analysis Week in our Level 1 introductory program. Just trying to, hey, remember I was barking there a minute ago about what is the value of one Dogecoin? That's actually what this is all about. How do you actually fundamentally justify the value of an asset? So, let's see what these people ask. I don't know. We'll see how we do here. So, number 1. Dear Brian, there is something I don't understand about your bullish case scenario for Bitcoin. How can you be... And I don't understand this word. I've never heard this word before. Concomitantly. Whoops. I don't want to cut that. I want to copy it. I got to Google that. I don't think I've ever heard that word before. Let's see what happens when we come up here. Concomitantly, meaning in the Cambridge English Dictionary, concomitant, drug. Ooh. Concomitantly. I've never heard this word before. Occurring or existing concurrently. Okay, I guess that makes sense. Attendant poverty and its concomitant social problems. Okay, I think I understand. How can you be concomitantly bullish on BTC and DXY? Well, unfortunately, I think this fall it's going to be absolute insane. I actually think there's so many moving parts to this. When Aisha, are you here? Are you here? Kekwa. What does that mean? Kekw. I heard Chile is about to have its parliament tilt to the left. I think he's gone from Chile. I think he left there. I think he's in the Middle East somewhere or something. Aisha! Where are you, Aisha? I thought I saw you here. Aren't you? You have a special name over on YouTube, don't you? I saw you sort of charming in last week. You're like, hey, I'm Aisha. No, not here? Anyway. Okay, so what I would say is DXY is an index of all of these. Hey, there you are. Is an index of all of these currencies. Like the way that they built it after the Second World War was all the European currencies and stuff, they were all worthless. I mean, hell, you went around Europe, half the place was bombed out, right? I mean, it was like Armageddon. And then at the same time, you had the Soviet Union sitting there in Berlin with all their tanks going, maybe we should just take the rest of the West. So in that environment, the United States of America sort of acted as sort of like a prop, prop up the whole system. And one of the ways that they did that was called this thing called the Marshall Plan. And the Marshall Plan just simply said, hand over sort of your monetary authority. And a lot of like Western European countries, they actually ship their gold through the whole German experience, the Nazis and all that. They shipped their gold back to the United States, and the United States was supposed to quote unquote hold it for safekeeping. Of course, they ended up expropriating it over time, but that's another conversation for another day. But in this is all in the context of the Cold War, which was something, it's hard to describe the Cold War now because most people that aren't familiar with the Cold War, they would never believe that the Soviet Union was as strong and as threatening as it was. But like I remember growing up in the 70s, there were a lot of people that were really questioning in the West, especially my father's engineering physics. My mother was a math major. that right there's a combination for one hell of a party, eh? But they're like their best friends in university and stuff were like other math professors and stuff like that. And these people were, if they weren't socialists, they were borderline commies, especially in Canada. Ironically enough, the leader of Canada right now, his father was in charge of Canada then, and he was open. He was very comfortable with things like sending in troops to bust up public protest. There was a independence movement in one of the provinces here in this country, and he was more than happy to instill martial law. And ironically enough, his son, who's now the prime minister of this country, has also said things like he actually really likes the way China oppresses its population. What? What did he just say? Cocksucker. There's all these people. If it's not Joey Diamond coming from the fucking right, it's China lovers coming from the left. You can't win. I mean, whatever happened to compromise in this world? We used to live in a society where it's like, okay, you're on the left, you're on the right, we have to get along, so let's all just compromise and let's, come up with something down the middle. No. You're either on the left or you're on the right, or you're a sympathizer. And again, that's sort of that talk that, geez, it sure feels like the 1% is building us up to some fucking horrible global war, eh? Okay, so back to our story. Following the end of the Second World War, really worried about the expansion of international communism and, in essence, the domino effect. Which the domino theory really came in, especially with McCarthyism and all that shit. But the point here is that following the end of the Second World War, they had to rebuild Europe as quickly as possible to somehow counter the Soviet Union. Because that was the real problem all along was, and it's kind of sad because I think what happened was the banksters, they put, and the King of England, They put Adolf Hitler in power to try and get the Soviets out of power. And that completely blew up in their faces, to the tune of 45 million humans having to die in World War II. Thank you very much, banksters. Hugs and kisses. So following the end of the Second World War, they still had the Soviet problem. That was still a major problem, and the growth of international communism. You want sort of an American view of international communism and the threat, go watch Rocky and Bullwinkle cartoons. And I grew up with them. They were prime time through the Cold War, 50s, 60s. By the time I was a child, they were basically like Saturday morning cartoons kind of idea. But that was the mental mind thinking, right? Roger Ramjet. Does anybody remember Roger Ramjet? How's the song go? Roger Ramjet, he's our hero, hero of our nation. Anyway, all that. Yeah, Natasha and Boris. And actually, Natasha was always that bad girl brunette that you always had the hots for. If you like bad girls, right? Natasha was she was the bad lady. Anyway, we won't go there. What's the matter for you? Hey, why do you look so sad? Hey, shut up in your face. Do you remember that? Do you remember that? That was forever ago. I haven't heard that in a long time. Hey, what's the matter for you? Hey, why do you look so sad? Hey, shut up in your face. What's that from? I haven't. Oh God, that's going back. What's the matter with you, eh? Somebody remember that? I think that was Italian, but yeah, I remember that back then. And actually, it was funny. I used to live down in the Caribbean in the late '80s and early '90s, and I lived with this one Italian guy once. And at the end of the Cold War, what was really popular to do for the Italians is this guy. He had a buddy of his, and they would hop on a motorcycle. And they would go over the border into Eastern Europe, and they would raid all the churches and steal all their jewels and shit, and smuggle them back into the West, and they'd sell them at just staggering markups. The people in the West wanted them so badly. There's an odd anecdote for you, eh? All right, so if we understand that the DXY is this index, and it's nothing more than a basket of these basket of these currencies, and theoretically all these currencies shipped all their gold to the United States, through Nazi Germany times, to avoid expropriation by Hitler. Then at the end of the Second World War, to sort of set up this new quote-unquote Bretton Woods sort of structure of how the currency systems worked, to justify the financing of rebuilding of Western Europe, try and get their infrastructure back up to the point where they could actually defend against Soviet aggression, and the Marshall Plan. They created this currency sort of system, this fiat currency system that we live in today. To a certain degree, at that point, everything was backed by gold. But then I think by the time we got to the late 60s, early 70s, the runaway price inflation pressures of the waging war in Southeast Asia, as well as sort of the Great Society experiment and social welfare programs in the United States, made things like the US dollar being stable against gold unattainable. And as a result, the Americans had to leave the gold standard. One might even argue that they had to leave the gold standard because, the central bankers actually stole all the gold out of Fort Knox the past 20, 30 years. It was a big secret, but once actually the international world went, hey, is there actually any gold in there? The Americans had to go, oh, actually, you know what? We're not going to do that anymore, and no, you're not going to allowed to get your gold back. Sorry, no, we're changing the rules. Great. So we live now in this sort of funny little, fiat currency. What are these currencies actually worth? believe it or not, these currencies that you hold in your hand, one US dollar, one euro, one Canadian dollar, one Australian dollar, one Japanese yen, they're worth nothing. Nothing. Zero. They are worth nothing. Which is just pathetic. Alan Greenspan himself even, famously quoted back in the 70s, if you leave the gold standard, then literally what this is doing is it's allowing the banking class to basically confiscate wealth at their leisure. There is no value to any of these currencies. And what you see happening in our society today is the end game of this silly fiat con job. That, and ironically enough, I suppose this is the absolute beautiful, perfect twist sort of, how do you say it? Revenge. This was all put in place by a gentleman who used to be called Tricky Dick. Horribly immoral. I mean, geez, how many Southeast Asians was he directly responsible for killing? Which number was staggering. So, ironically enough, he was actually part of Eisenhower's presidency. He was a vice president for Eisenhower. So, man, this guy, he was basically the United States, Washington, all that kind of shit. And I do believe that he is part of George Bush Jr. and all that family were part of that sort of right-wing Republican part of the government. But their sort of thinking is that, hey, we fought against the commies. We won. So it doesn't really matter. We won. We're the victors. Whatever rules we set, that's what we're playing by. Whether you like it or not. And there are great stories of South American leaders and stuff that are like, no, we don't want to play by your US dollar system. And literally those leaders either ended up dying very quickly or ended up, getting thrown into like jail or prison. Being excommunicated in their own countries and stuff. Even just in our modern day, right? Fucking Saddam tried to create a euro-denominated oil contract. See you later, Saddam. Gaddafi tried to create a gold-backed oil contract. Whoops, see you later, Gaddafi. Nice knowing you. So these people, they play hardball, man. These people play hardball. So, where am I going with all of this? The underlying value of these currencies is zero. It doesn't matter whether it's a US dollar, doesn't matter whether it's euro, doesn't matter whether it's Canadian dollar, Australian dollar, yen, whatever. They're all zero. For a very long time, it was sort of like emperor's news clothes. When somebody actually opens their eyes and goes, hey, you know what? This guy doesn't have any clothes on, then the whole damn thing collapses. And I guess, guess what, folks? That we are in that phase now. Somebody just woke up a little bit there, went, holy Jesus, these guys don't have any clothes on. And in a weird sort of way, they're kind of like trying to close their eyes now and go, no, I want to go back to sleep. I was having really good dreams. You ever tried to do that? Like you've slept too much and you're like, no, I want to go back to that dream. I want to go and you just can't get back to sleep. So I get the feeling we're in that kind of phase right now. You millennials have opened your eyes. You've woken up. You've seen what reality is. And you're like, oh, geez, yuck. So, why would I be bullish of DXY, but also bullish of Bitcoin at the same time? Well, DXY is nothing more than just a basket of all these worthless currencies. That's all it is. It's just an index of all of these fiat currencies. A little bit of Canadian dollar, a little bit of euro, a little bit of yen, etc., etc., etc. So if I'm bullish of DXY, then really what I'm saying is I'm actually bearish of all of these little currencies that are in this basket. And that's relative to the US dollar. It's not really like, oh, the currencies are more valuable or less valuable. It's more like, what is the collective value of these currencies? And I think the collective value of the international currencies is very poor, and it's getting worse. I mean, like here in Canada, for example, the headline is the Canadian government is spending $1.5 billion a day. So that means that on an annual basis, they are spending $365 billion roughly. It's 1.5, right? So it's actually a little bit more than that, like $500 billion a year. The Canadian economy is supposed to be about 10% the size of the U.S. economy. Well, if that's the case, then on an equal basis, it would be like the U.S. running a $4 trillion a year budget deficit. I don't think the Americans are up to $4 trillion a year, whereas the Canadians are on a relative basis. I don't even know what the European numbers are, but I do believe that the DXY conversation is more about one currency relative to another. And we're supposed to be going through a greed cycle here. Of course, it's always tough to see the forest through the trees. When you're right in the crisis, it was very difficult to see the top of the dot-com bubble. In fact, there were presidents of high-tech companies that went on public financial stations and said, I'm getting out and I'm selling. I think that things have gone a little bit too far and I want to walk away. And there were university professors laughing at them on national television. I mean, how humiliating is that? So that's how stupid the greed cycle gets. People get so greedy that they will laugh in your face on national television. University professors like Princeton. So really, this is more a conversation about that. And interestingly enough, that was when the U.S. dollar index was its strongest and all the international currencies were their weakest. And the smart thing to do was to buy the international currencies. You could have bought the Canadian dollar at 50, 60 cents. And through that commodity cycle, the Canadian dollar went all the way up to 110, 115. I mean, huge moves. But I'm not bullish of the Canadian dollar now. If anything, I'm bearish, and I have to be bearish for the next 15, 20 years. The only problem is how the hell do you see the forest through the trees? Over the short term, things are up and down like a horse drawers. So this is really more commentary of one currency relative to another. It's not a commentary on, do I like currency versus hard assets? Because the sad part about it is these currencies right now, they are so fucking worthless. It's ridiculous. Once we get some stability, this sickness is dealt with, all of these companies have been refinanced, all of the 1% crony capitalism, all those people have been sort of solidified, then my hunch is we go back to classic economic models. But they're not going to do that shit through this sickness. Just because nobody knows what the hell the next drop is. I believe that between now and the end of the year, I actually like the idea that this is a tough one. I do believe that over the next sort of 6 months, you might see a bit of a counter-trend rally in the DXY as people because I'm hearing a lot more public people are saying, well, it looks like COVID's dealt with, lots of vaccines, we're opening back up and all that shit, right? So if that's the case and, the economy starts ramping up, we get huge econs, we might hear the Fed officials start to say, well, you know what, now we have inflationary pressures, so we're going to have to start normalizing monetary policy, which is probably going to bring the stock market to maybe a bit of a pause. Brings the cryptocurrency market as a risk asset to a bit of a pause. It actually causes the DXY, relatively speaking, to outperform. And believe it or not, actually, I like the idea of Bitcoin actually coming down. And like I showed you there, I walked through about 10, 15 minutes of Bitcoin just basically parked in a massive range here as we sort of clean up this mess. And believe it or not, I think this could easily go on for another good 4 or 5 months here. No problem whatsoever. In fact, really, we won't get a buy signal on Bitcoin and crypto until you see a W on the other side of this trend line. It's going to take some work. There's no doubt about it. This is going to take some work. I mean, hell, we might just go woohoo straight right back up. And if we do, that's actually not good. Because then everybody's going to be back on the bull side. And Joey Diamond's going to be coming out doing all his, oh, you just stop buying Bitcoins. Yeah. And maybe like regulators start ramping up. And you get, I mean, the altcoin shill fucking circle jerk. Oh my goodness. It was getting pretty crazy there. So we'd actually prefer all that kind of stuff to calm down. Get rid of the BitConnect people of this world. We don't need that shit. And if anything, just doing some simple trendline analysis, the high to low trend lines, these are great. Because I think that that's probably a huge resistance level in here. Right in that window there. I would prefer, believe it or not, I would actually prefer that we just bump along, do something like that. That would be way better. Because then that would be just nice, higher highs, higher lows, nice, healthy bull market, right? And then we get into Fjord TA. Straight up! So, as it stands right now, going back to your question, this is kind of an image where the USDXY should actually be a little bit firmer in this environment. Let this consolidate. Then when this starts turning back up, then we should see DXY start to turn back down. And I got a funny feeling, and it sucks, but my feeling is that I don't think we're through this sickness. And I think that through the end of the year, this Bitcoin could go absolutely fucking apeshit over in here. I get the feeling that we're going to assume that the sickness is done. The economy is going to be ramping up like crazy. So the Fed's going to be conflicted. Do we fall into the hyperinflation camp and we got to control the market through interest rate policy? But if the sickness starts coming back, flu season, October, November, December, that's usually when flu season's the worst. And, we have to start shutting down economies, and we're starting to talk about stimulus packages because that's another fucking quarter of basically GDP's got to be found somewhere, and we're going to have to print a whole bunch of shitload of new money to offset the fact that they're just closing the economy down. I think you could see sort of Willy Woo's kind of crazy ass, multiple hundreds of thousands of dollars for Bitcoin. That's not outlandish in my eyes. So once we're through the end of this year, though, I would be very cautious about any sort of further upside move, because then we start getting into those 4-year cycle studies. And once we're through the end of this, right, and you can see this in November, December, these were the previous years of 13 and 17. Once we get over here, then I think we're done probably for the next few years. And we got to go through the whole damn process all over again. If anything, because of COVID, I have to say that this cycle actually snuck up on me very quickly. We've been so distracted by all the Jupiter-Saturn cross shit and COVID and sickness and everything. So, okay, isn't a bullish case for BTC to 300K predicted on a hyperinflation Weimar-style scenario happening in the U.S.? Well, in the U.S., I hate to say it, it's all of these Western currencies. They're all just as bad. I mean, you think Euro's any better? I mean, Euro's much worse. Hey, Andre, I saw Andre's here. I think Drahi now has been appointed King of Italy. So, you got central bankers there basically being appointed to run countries now. Jeez. I don't know what the hell the fate of Europe, Western Europe is, but it's going to be a bit of a choppy slog here. I don't know how you'd be bullish of that. Andre, there he is. I am. All right. Well, in that case, how could the DXY still be bullish? Well, again, it's relative to the other currencies. What are your thoughts on central bank digital currency project that would allow the Fed to, well, there you are, circumvent commercial banks and lend directly? Finally, are you planning to teach astrology? I don't know. I still think the digital currency story is a generation away, right? So it's probably I would say the digital currency introduction would be best if we can get into the next growth cycle and the market is super frothy and super optimistic and super bullish, and then they pull like a 1929 stock market crash kind of thing. And through that kind of cycle where, we're not worrying about sickness and it's just pure economics and people making bad decisions, through that depression scenario, they make the transition to the digital currency world. I would also say, too, though, who is the Fed? This, I think, is a big misnomer about our society. I think people in the public, and especially democratically elected politicians, I think for some reason they think that these central banks work for governments and work for populations, when you couldn't have anything further from the truth. You literally couldn't. It's depressing as hell. Like I said, I've told you guys before, Woodrow Wilson, when he allowed the central bank in the United States, at that point there was a lot of conversation about like Keynesian economics and, Engels and Marxism and the role of government in society and trying to balance the playing field. And the bankers, they played them like a fiddle. And they're like, yes, modern monetary theory, all that kind of nonsense. When really, it's a sucker's play. Interest rates are historically low right now. His interest rates are cyclic in nature. They move in a big circle. Does that mean interest rates are going to stay low here? No. It actually means the exact opposite. But, what can you do? Nobody will listen. People actually start coming out with modern monetary theory. Money doesn't cost anything. We're now in a new era where money doesn't cost anything. That's just such a load of horse shit. I don't know how. It drives you crazy. Money does cost money. It costs money. It does. So, I believe that the Fed will, in the United States, the Fed, quote unquote, really all it is just a collection of bankers, association of bankers. And of course, the bankers are shareholders of their banks. So they would like the banks to do well. Thank you very much. The central banks are nothing more than just basically a different way for us to see the shareholders of these corporations enacting policy that's basically geared to keep them in business, geared to make sure their profit margins are fat, geared to make sure dividend growth of shareholders of these banks do well, and of course to make damn sure that the banks don't go out of business. It's a very convenient relationship. I mean, hell, in my country here in Canada, the person who is supposed to be the public's representative for the finance department of our country's government does not have any experience actually in the financial services industry. What? Oh, she has a degree in Eastern European history from Harvard University. Well, that's nice, but that doesn't have anything to do with fucking finance. What a joke. I mean, I mean, if anything, you almost have to stand up and applaud how Joey and his buddies have completely finessed this whole society. We are such their bitches, and there's not a fucking thing we can do about it. I mean, well, I guess you gotta give them applause. Way to go. Sure hope you were paying attention up there, God. This is not sustainable over the billions of years, is it? And it's kind of sad, this little species, man. We keep fucking shooting ourselves in the foot. How on earth are we supposed to evolve if we can't get these goddamn bankers and these special interest people out of this business of raping the public? And it's been going on for millennia. Thousands of years. You could even go back into biblical times there trying to get these people out of people's lives. Nope. You just can't do it. It's impossible. I don't know. What do you do? I don't think we do anything. Klaus wins again. Way to go, Klaus. Hugs and kisses. So really, all this talk about the Fed is really, it's just a talk about an association of the 1% where they will do everything in their power to make sure the 1% are well served. I mean, that's really what the Fed is. And it just so happens to be in the financial services industry. Right? So, understanding that that's a fact, that's reality, is this thing called the Fed, is it really going to go in and fuck up this gravy train that the bankers have set up for themselves? Are they really going to do anything to derail that? I mean, come on. This is what drives me nuts about these conversations, is if you just break these pieces down into real terms, there is no way in hell the Fed is ever going to do anything to undermine the commercial banking industry. They might tell you publicly, oh yes, we're here to serve your purposes, public, and our, and it's so cool they got that dual mandate. So basically they could get away with anything when you have a dual mandate of price stability and maximum employment. Well, you could do anything in that. Well, now we're leaning towards price stability. Well, now we're leaning towards maximum employment. I mean, that gives them a fucking, that's like a mile wide doorway. They can do anything they want in that environment. And right now, I mean, there's no fucking conversation about price stability now. The conversation now is about, well, we want to maximize employment. And the irony of all of this is the irony. It's terrible. Like, if you actually think this through. We know U.S. government employment data, people literally fall off the data set after about 6 months, even if they get a job or not. So Mr. Fed Governor goes, we're going to, increase the money supply, blah, because we want maximum employment. It turns out all the jobs are replaced by robots. None of these people get any jobs. So yeah, they say maximum employment, but there are no jobs. But mysteriously, the employment data says that all those unemployed people, they all must have gotten jobs. They're not on the unemployment rolls anymore. And 6 months, a year from now, they can say, well, you see the unemployment data? Now there's only 1 million unemployed or whatever, and there was like 6 million last year. So we must have done our job. Look at us. Elect us again. Give us big fat raises. I mean, the con job is just, it's stunning. Again, at some point, you kind of got to stand up and give them applause. Thank you. I mean, you got away with literally, Brian, he could give you some pretty ugly visual demonstrations of what they just got away with here. I mean, it's stunning how brutal this is. Absolutely stunning. And the thing is in generations and centuries gone by, that kind of thing, the manipulation is so brutal that it often ends in revolution because people are like, what's the point? Might as well just pick up a gun and fucking hunt down these bankers and try. And you say that kind of stuff, and all of a sudden now FBI agents, actually I guess in my country, CSIS agents will mysteriously turn up, start saying, hey, you're spreading hate speech. You're not supposed to hate these people that are ruining your lives. You're supposed to say thank you. You're supposed to actually ask if you can pucker up. Are you going to ask politely if you can have a poo sandwich? Ask politely. You're not going to ask politely? All right, off to the concentration camp you go. It's beautiful how they've done this to us. Absolutely beautiful. Or pathetic. I don't know which it is. So, my answer to you is there's no way the Fed will ever do anything that actually undermines these commercial banks. Ironically enough, this Fed, you think of Janet Yellen and, Alan Greenspan and Jerome Powell. Do you know who the Fed really is? The Fed really is that guy. That's the Fed right there. Do you think this Fed is going to do anything to undermine his boogers? Booger? Shall I pick your nose, sir? You better not, or off to the concentration camp you go. Bitcoin's a fraud. JP Morgan isn't. Even though we've been convicted of plenty of cases of fraudulent activity, Bitcoin is a fraud. Don't buy Bitcoin. Buy JP Morgan. This is the Fed right there. That is the Fed. You know what I find this fascinating? I mean, this is so screwy about our lives, and there must be something really weird going on here. This guy should not be white like that. What is going on with our human species? This guy's not that much older than I am. My hair does not look like that. I actually think this guy actually dyed his hair white. I actually think that. Call me crazy, but oh well. He's not that much older than me. I mean, that's the irony of it all. Okay, so back to, are you guys enjoying this? Is this a fun show today, or is Brian just making a train wreck of this all? I don't know. Yeah, actually I watched an interesting article on the reptile alien thesis. Who is it that's the reptiles? Oh, I watched a really cool video on that over the weekend. Oh, darn, I can't remember. One of the ancient alien sort of stories is the reptiles. Hey, he might be part of the alligator crew. Who knows? The lizard people. Who knows? They're so funny. Oh, well. Anyway, hope you guys are enjoying the edutainment. What time do you go live in a level 1? Oh, man, I don't even know what that means. London Galbalden. I don't know what that means. The 3 a.m. is offbeat. Okay. Oh, that great guy. You found that video, eh? If you want to watch me, I guess I was on that crypto guy show once, way back when. Did he like me, or I don't think he liked me very much though, did he? I seem to remember that guy doesn't like me very much, and I mean it's understandable. I don't like people who shill, so as a result, if you shill, I'm not probably gonna talk highly of you, and as a result, you're probably not gonna like me. So it goes both ways. So I mean, Aisha, I sure hope you got the message about my comments about this thing called the Fed. It's just it's a private company, and it's built and it's to serve the 1%. It's just simple as Okay, you mentioned that Gail Dudak, Mama Bear, was a value fundamental investor. I wonder if Gail's even still alive. Jeez. I mean, keep in mind this reference to Gail. That's like a 25-year-old reference now. God. But maybe she was a technical investor. Actually, she is a technical investor. She's actually really good at TA. That's what I gathered from a podcast I heard about her. Yeah. She's good at TA, but the bottom line here, I mean, it's kind of like me. I mean, I call myself a rational investor, which means that I want to try and inject at least a little bit of rational, fundamental analysis into my picks. So that was her. I mean, and really, any good analyst should be a rational investor. The really shitty analysts are the ones that come out and say, hey, yeah, 50 cents? Yeah, Doge is worth 50 cents. It's like, what? Have you done any fundamental analysis into this at all? So, Jose G, I'm not quite sure. What's your question here? Yeah, I think she's a good TA. Yeah, there's nothing wrong with that. If there's an... I don't know what your question here is. Is your question like, why the fuck are you such a dickhead, Brian? If that's the question, okay, cool. But I'm not quite sure what the question is here. You like that one, Kevin? Yeah, go into that level 1 class, find him and say, okay, well, what's the question? I don't understand what the question is. Okay, number 3. What does public financings look like? How much money do you have to be able to participate? Actually, this is a great commentary on what I'm trying to do with this Hawaiian experiment. Unfortunately, you know, I think what's happened here in our world is that the 1% is really tired of things like lawsuits, you know, like anybody who has less than, say, about $50,000, and really, you know, I suppose less than $1 million in net worth nowadays, excluding your own home, right? The powers that be, they just don't want the public invested. Because 9 times out of 10, the shit that's being shilled, it's garbage. I mean, if you listened to Elon Musk, you would have gone and bought Doge there at 60, 70 cents. And the cock sucker would just basically be sitting there laughing with your money right now. He should have come out publicly and said, please do not buy this asset above, say, 20, 30 cents. It's ridiculously overvalued. Just wait for it to come back down into reload zones and start Wing out, and your indicators start Wing out. That's what he should have said. As a good citizen, as a fellow person looking out for your own best interests. Do you hear me say that to you people? Somebody on YouTube, just give me some feedback here. When I talk to you, do you get the impression I'm actually trying to talk to you like it's in your best interests? That's why I'm doing this. I don't make any money from any of this shit. You know, this the old TRI website. You know, at best, I have like, what? 13% interest on profits? I mean, I ain't getting rich. I mean, number one, we don't charge you a hell of a lot for the subscription or, you know, school programs or anything. And number two, I don't have a huge interest. So it's not like I'm getting rich off of any of this. I'm not. And I don't get any money from these YouTube videos or anything. Do this all for free. So that's the number one problem in this world, is everybody just, they do this because they just don't give a fuck about their fellow man. They just don't give a fuck. It makes me so angry. What happened to this world? So, because of that, you got, class action lawsuits that just fly everywhere because people are so taken advantage of. There's politicians in the 1% who want to try and stop the lawsuits. Well, maybe stop the fucking public rape. Why do these capitalists keep raping? Can't we get some fucking moral fiber in this society? I don't get it. Just doesn't make any sense to me. So, the problem here is that, I used to do public financings all the time for these companies. But, after sort of all the disaster of .com blow up, BitConnect, the fucking shit here, even in crypto. It doesn't end. It's a hallmark of our human story. So the regulators go, well, it's not really fair to change the law because, hey, the law's there to try and protect us. So if we can't stop the unscrupulous shillers from shilling, somebody told you to buy Bitcoin up there at 50, 60 grand. I'm not quite sure who, but, well, actually we do know who, don't we? And you can't stop these people, right? You can't stop them. That damn German guy, he's probably going to be out going today. Buy Bitcoin, buy Bitcoin, buy Bitcoin. You got to buy Bitcoin, you got to buy Bitcoin. So if you can't stop that, then what do you do as a society? And so society's solution is, all right, let's put some rules in place that unless you're like stinking rich and you got a lot of money, you're just not allowed to play in this game. That's what this sort of, you've heard me squawking about, what do they call it? Accredited investors. So I talked to a lawyer about this Hawaiian project, and she said, well, you got a list of accredited investors. I can throw the paperwork together in half an hour. Maybe cost you $5-10 grand to file with the feds. You can do all the securities you want. Nice and simple. Boom, 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 boom. If you do not have accredited investors, it's going to probably cost about 5 to 10 times that price. And you have to go through every single state, every jurisdiction the person is in. You have to file paperwork with the state, disclosures, the whole fucking thing. I mean, just a massive pain in the ass. And as a result, it's really taken a lot of wind out of my sails for this project, which is very depressing. There were a couple of people on the site that offered some interesting solutions, interesting workarounds. Foggenbaum! Somebody actually signed up to this site with the username Foggenbaum. I love it. But that person said that their wife was a lawyer, and maybe we'll chat and see if we can review. As well, I am talking with Zach with a couple other lawyers down in the States to try and figure out workarounds. But that's sort of where the status of this is right now. But the point here is it comes back to this, and that is that you used to do financings all the time, back when we actually used to have some sort of moral fiber in our society. Now it's just like everybody's fucking everybody. And so as a result, you can't believe anything. And so as a result, the regulators have gone, everybody's fucking everybody. Everybody's suing everybody. The easiest way for us to try and just put a blanket on this is, let's just say anybody who's less than $1 million net worth, you're just not allowed to participate. Simple as that. Yeah, so Kevin, I see you're making a comment there about crowdfunding. That was this person they mentioned, and maybe you guys in the comments, if you have an alternative, but this person mentioned this one site, which I thought was really cool. And I'm going to explore it a little bit. Of course, I have no idea if we'll have any sort of success with this, but they mentioned this site. It's kind of interesting. Invest in Main Street, not Wall Street. Mainvest. So there is this kind of thinking. So I am kicking around this. I just don't know whether I can raise the kind of money that I need to get this project off the ground. See how it goes. Anyway, wish me luck. But the point here is that there are tons of these financings going on constantly now. But the problem is, most of them, you have to be an accredited investor. So the public actually doesn't even really hear too much about that. There's another one, Republic Co. Thank you. Maybe why don't we collectively throw all these kind of places? I'll even do this. I'll put this in the comments. Hey, look at that. There's another one. WeFunder. Hey, so you guys. And hey, this is maybe the one benefit, the one good thing coming out of this crazy fucking world is You know, we do these live YouTube streams. Just as long as you don't say the words that trip up the algorithms, maybe we can all work together just to quietly, sort of below the surface, make this world a little bit better place. So I'm going to myself. Look at that! I even got a downvote. Now I wonder who that person was. I wonder what it was that actually got them to the point where they're like, I have to downvote this asshole. It's fascinating, eh? Interesting. I don't seem to have the comments on here. Let's see if I can change that midstream. I wonder how you do that. Show more. I thought they had like a comments thing on here somewhere. Comments. There you are. Allow all comments. Oh, isn't that weird? Wonder why the comments are not showing there. Alright, well, theoretically the comments are on, but I can't see the page. Anyway, after the video's going, maybe? No, weird. So it's not bizarre. So, like, I show the YouTube page here, and it doesn't have the comments field. So I'm not quite sure how you do that. Anyway, I was going to put that. There you are. Allow all comments. Oh, there's the site that that the person in the Hangout shared. If you guys have other sites in the comments, maybe you can put those down and after use those to try and figure this out. And actually, probably you're hearing that stuff too. So, jeez, oh man, I gotta stop that. What a mess. Okay, let's keep moving forward with these questions. What time is it? Oh my god, it's already 12:30. Fuck, I've been talking for 2 hours. I haven't said anything. Oh god, sorry everyone. Maybe times 2 this might make it a little easier to get through this. I don't know. Where did I put that? Oh, I see. That's over here. Put you over there. Fed dude, probably. Thanks. Oh, the German dude. Yeah, I guess. Thank you, Andre. Yeah, ask around. And it might just be something like, you know, I'm just going to because I'm putting up like 300,000 or 400,000 of my own money on this crazy Hawaiian project. I might just do this as sort of like a private crowdfund. Because a lot of people have actually said to me, Brian, I'm not buying this because it's some great investment. I'm buying it because I trust you. And if you tell me you want to do this, I believe in you. I believed in you at TRI, and we'll go ahead and do it. Because, like I said, doing this as a security, oh boy, this is turning into a real nightmare. So, anyway. I'm still going to work on that over the next few weeks. There's really no hurry there right now. So, okay. So, there's lots of examples of financings. I mean, all you got to do, I mean, hell, we can just go check this out. We'll go private placement. Boom. That's all you type in, private placement. So what is a private placement? SEC.gov, look at investor bulletin, private placement, probably under secure investigation. SEC, private placements. I mean, it's pretty easy. And then even they have like non-private placements, so these would be like brokered, and then you can have like brokered. You saw that brokered, right? Brokered private placement, brokered placement specialist. Ooh, there's a job. I used to do a ton of these brokered and non-brokered private placements. I mean, just tons. I mean, there's so many, it's ridiculous. Every single company that works in the public space, this is how they raise money. The only issue is, are you allowed to participate? And usually what you need to do if you are interested in this is you should work with a full service brokerage. And then the full service broker will tell you point blank whether, number one, you're an accredited investor and you can participate, or whether you know, the brokerage house itself is going to take down the paper. And you can always even just call the company right up directly. You know, private placement, non-brokered private placement, that's done entirely through the company privately. And then they'll tell you what the terms of the deals are. So I don't know whether that answers your question. I mean, I can show you in the Broiler Chicken, Mr. Pump, I can show you tons. I mean, there's tons of these. They happen every day. Like the site on the site, actually the site on the site, the web page that I like to send people to research Canadian companies. Almost all of our companies, half of the like Sky Gold, for example. This is one that's running right now. Labrador Gold. Everybody wants to get into Labrador Gold industry, right? Sky Gold. So this one, you just go through the news. Every single company, same thing. They acquired a property right in the expanding precious metals exploration portfolio. Newfoundland Gold Strategic Alliance. Newfoundland Properties. But, you can just go through. How did they fund all this spending of money? Ooh, options grants. I always love options grants. Well, it looks like 7.7 grams per ton over a half a meter. That's not bad. 32 meters of 0.78. That's not really that great. Kind of meh numbers. There's some more results. Lots of results. These guys have been busy. All right. Of course, I'm going to try and find a financing for you, and I can't find a single one. Typical. Anyway, somewhere in here. Here we go. Sky Gold closes financing, including strategic investment by Eric Sprott. So this was, it turns out, I guess about a year and a half ago. So there's a financing. Pretty typical. Let's see what the deal is. Please announce. Company's closed. Non-brokered. Private placement. 20 million units at 10 cents per unit. Probably some warrants in there. Oh, look at that. They got warrants in there. You know how much we love our warrants. Did I show you this one warrant that Zach found for us? I'm probably going to go just market buy this tomorrow. Couldn't believe it. Damn. So there's an example of this company must have done a financing, and the warrants are actually listed on the exchange and trading now themselves. So it's a pretty typical shit, man. This is not new or different or out of the ordinary. Very, very normal. Very typical. Oh, what are you guys saying over there on YouTube? SBM says, that guy be like, guys, I was in the washroom and I found some interesting in the charts exactly as predicted. Also use my Bybit shillin'. All right, thanks. Funny, strategic is a special kind of investing. Yeah. Well, that's the funny thing is Eric Sprott, right? This is, he's actually, that's a pretty famous name here locally in Vancouver. In fact, actually, there's a famous local college, Sprott Shaw Community College, since 1913. Man, those guys have been around forever. Actually, they would probably be a really good analogy to what was the world like through that last Spanish flu, So anyway, so there's a typical, I love this Sky Gold right now, but I love it because it meets all the VCIM criteria. And it did. We've been in this thing a while. It's done quite a bit, but let's see. So now, oh, look at that. They've even diluted themselves. They're now up to 63 million. When I first got into this thing, there was only about 20 million out. It's good to see that they actually have a PE ratio, so that's kind of cool. They're earning some money. So anyway, there's a very typical VCIMer, but the story's old now, right? We're long from 12 cents. So, getting close to doubling our money now already. So, Mr. Pump, if you do decide to continue working with TRI, we do have, I know we have the TRI SOF group. We do lots of this kind of research in there, but level 1, we would prefer to wait for you to get to level 3 to join that group, because we really want to make sure that you're educated and you're sort of actively participating and contributing to the group versus just spectating. So just stick around the site. Just continue working through the program. And if you do decide to, become like a professional trader, and you're doing serious work. I mean, our TRI SOF group, they literally, they are, it's beautiful to watch TRIers because these guys get it. So like my day trader group, the pros, they're there every fucking day because that's what you got to do. If you want to be a professional trader, you've got to show up every single day. And same thing with the TRI SOF group. These people, they show up and they do the work. And that's what you got to do as a trader. So, Mr. Pump, you want to stick around the site, show us that you're serious about this. 100 paper trades, 120 20s. Get that trading plan vetted out. Get your financial plan vetted out. Fund all your various stakes. You want to participate in the venture cap market as part of your stake. Oh, that reminds me. We've had a few Canadians join, obviously, with the new school term, and we had a Canadian room on the site. Justin, I don't know where the hell he goes to. This guy disappears, drives me crazy. But anyway, Justin was supposed to be the quarterback of this room, the rational millionaire, wherever the hell you are now, Justin. So we did have some people actually asking specifically, is there a Canadian room? So Mumbling Manuscript, thank you so much, Shane, for jumping in here. Shane, of course, great Canadian, helping out Mumbling Manuscript. But, if maybe we even want to have a little bit more activity from the Canadians in this RRSP room. If you're Canadian and you're like, oh, I didn't even know that was there, then just PM me and I'll invite you and all that kind of fun stuff. But the point being, like, if you are doing the Canadian stocks and all that, I mean, our real pro room is the TRI SOF room, but I would prefer that you get through the education program before we invite you there. But the point here is we can, through the daily briefs, if you want to poke me and stuff, we can show you more and more examples of financings. And really what I'd love to hear is that your group in the level 1 program, find some people that are interested in penny stocks. Build a little subgroup, right? You build a little subgroup of people. Brian, I got like 4 or 5 guys. We're all jazzed about penny stocks. I'll put the group together for you. I'll come into the room and I'll just sort of, oversee and just keep an eye on you guys and point you in the right direction. Well, maybe even, fire in the TRI SOF video so you guys can watch any ideas. And of course, we talk about fucking stock ideas in the daily brief constantly. So just be active and show up and you'll get this. Just stick around. I was talking with one gentleman the other day, super excited, over the top. Oh, we're going to change the fucking world, Brian! And I'm like, okay, that's cool. But you have to make me one promise. And I don't care if you don't make a goddamn penny. But you, my friend, have to show up. Between now and 1 year from now, I want to see you here every single day. I want to see you learning. I want to see you practicing. I want to see you logging, journaling, paper trading, a whole damn thing. That's how you get good at this. So, Mr. Pump, you want to get good at this? You want to kick ass? Just stick around and show up for the next year, and I'll show you plenty of financings. All right, number 4. What are your thoughts on EBITDA? My thoughts? I guess it's good. I don't know. I don't have any negative thoughts. I'm not quite sure what the question is. I heard EBITDA kind of got drunk at the last Christmas party and puked all over a couple of the employees from the mailroom. So I don't know. I wouldn't take EBITDA out on sort of like a drinking binge. It might be a bit embarrassing. I don't know. That's what you mean. Okay, fine. EBITDA works great when the Fed is saying things like, well, we're not going to raise interest rates. We don't think there's any price pressure. We are encouraging economic expansion. We believe that the aggregate pressures are not inflationary. As soon as the 1% starts to say to you, well, money now is no longer free. That there will be a cost to this. Then EBITDA goes right out the window. So, really, the answer to this question is really all about what is the market state. Is it Missouri? Is it Arizona? Is it Alaska? Is it Wyoming? No, silly. State, first off, what's been the general message from the Fed? Is the Fed cranking interest rates up? Taking the punch bowl away? Or are they saying, we're fine. Here's all the free money you want. So, given that backdrop, and right now I would say we're in the free money backdrop, sickness is what's dominating, and until the sickness is dealt with, we will stay in that free money environment. So in that kind of environment, EBITDA rules the day. Company says, and what is EBITDA? EBITDA is simply earnings, but we're going to look at earnings and we're going to take out a bunch of stuff. We're going to take out interest, right? That's that whole thing about the Fed. If the Fed's saying, money's free, don't worry about it, well, then we don't really need to worry about the interest that the company's paying on debt, right? If anything, maybe the interest payments are going to be going down. Depreciation. The interesting thing here is that usually depreciation affects companies with massive capital investment. Things like utilities, or, a fucking nuclear plant costs billions and billions of dollars. So if you don't, take it easy, Ray. If you don't have a huge capital investment, well, then you don't really have to worry about depreciation. It's not that big of a deal. And also, too, a lot of companies will sort of finesse balance sheets and sort of generate earnings by doing things like writing off old assets, depreciation. Well, that's not really real sales. It's not really real growth. It's sort of an accounting trick to try and finesse the numbers. So let's get rid of depreciation. Taxation. Well, if you're not earning any money, well, then theoretically, you don't owe any taxes. And a lot of companies that don't earn any money they'll through financings that we made reference to up here, they'll actually flow those tax deductions off to shareholders. So we don't really have to worry about taxation here because these companies don't really earn any money. And then amortization. That's very similar to depreciation. It's another accounting trick. And, of course, it's to do with the cost of money going forward, not backwards. So, depreciation, interest, taxation, amortization, none of these things have to do with actual real growth. They are more sort of like accounting tricks. And as long as you're in a friendly interest rate environment, well, you don't have to worry about interest rates. And then things like depreciation, taxation, amortization. Well, if you're a startup, you're not even really going to be involved in that kind of stuff. So it's kind of irrelevant. So also, too, though, remember, you might have like old defunct companies that are restructuring themselves. And through the restructuring, take it easy, Colleen. Through the restructuring, they might be writing down old assets. So if you're trying to value a relatively new venture that's going through a restructuring and they have a whole bunch of write-offs, tax losses and stuff like that, that's not really real. EBITDA is great for just measuring raw growth. The only problem with that is that as soon as interest rates start going up, then that means that the Fed kind of wants to bring growth into line. Things are getting a little out of hand. Inflation's starting to get too much. They're going to have to start raising the cost of money. And in that kind of environment, then obviously discounting, disregarding interest rates, that's asking for trouble. And if your company is trying to grow, but after taxation, amortization, depreciation, and interest, you still can't earn money, then the street starts saying, enough is enough. So while you have that low interest rate environment and the Fed is friendly, EBITDA works great. As soon as interest rates start to turn and the Fed wants to cool things down, stop using EBITDA. EBITDA is going to get you into a lot of trouble. Okay, number 5. Would it make sense to switch between growth and value equities depending on the cycle? Yes. But there's actually even more parts to that, Jose. Growth usually does well in like the latter part of U.S. presidential cycles. And value actually usually does better at the beginning of U.S. presidential cycles. I'd also say, too, value usually does better when growth has been horrifically bid up. So, cryptocurrency is a great example. You might have thought of Bitcoin when, you've seen this chart from me lots. Bitcoin down here, pretty close to cost of production. Value. Up here, not value. So, interesting enough, this is a growth proxy. So, as this thing's going zooming up, growth. You look at this right here. Remember we said that value actually does well at the beginning of U.S. presidential terms. We're noticing actually a lot of push towards value names right now and out of growth. The irony of it all is that might knock this thing back down into value levels, and this becomes a value story again. But up here, this was all growth story, growth. And this is predicated on, of course, the greater fool's theory. The only problem with this kind of thinking here is that it works okay for stocks because they're earnings engines. So if they just keep growing and earning more money and more money and more money, then you can justify this thing keep going higher and higher and higher and higher. Problem is, Bitcoin's not an earnings engine. So it doesn't have any sort of earnings. It's a commodity. So you can't use that logic here. So this is like a how do I say this? It's a commodity. So ironically enough, if you want to try and buy value, you have to wait for it to come back down the cost of production. You're going to buy a stock, the problem here is when we get into a value market, things like interest rates are going up, cost of money's going up, inflation's going up, right? Growth names can get hit hard very, very quickly, and all that sort of fluff comes right out of the market. Think of like Tesla. Just ridiculously overvalued. I don't even know what the fundamentals are now on Tesla. What time is that? I got to get going here pretty soon. So, as much as I have a feeling this is going to be one of these, I'm going to have to finish these questions into the next week. I can't believe I've been talking for 2 hours. Have you guys gotten any value out of this today? If you sit here and listen to me banter on for a couple hours, am I doing any value here, or is this kind of wasting time? I hope you guys are getting some value out of this. What was I supposed to be doing here? Oh, yeah, Tesla. It's so sad, too, because Nikola Tesla is such a beautiful human. 963 million shares out, too much. Oh, Jesus H. Christ. 26 times book value. Fuck. This is crazy. 600 times earnings. How does anybody justify buying this shit? This doesn't make any sense at all. So, if you broke the company up in bankruptcy and you forced that guy's toupee off of his head, you would actually find out that his toupee is worth $23.95 a share. And here it is at $625 a share. It just goes to show, Jesus, it's staggering how completely illogical people get when they come in to buy growth. I like to buy assets that are, if they go into bankruptcy, then worst case scenario, when they actually break the company up and they spit it out the other side, you actually get more out the other side. In this case, this kid goes into bankruptcy, and you're only going to get $23 a share. Oh man! And I'm not saying it's not gonna happen. I'm not saying it's gonna happen. I don't know what the fuck's gonna happen. Don't get into the business of predicting the future. But what I am gonna say is, it's your money. You have a choice where you're gonna work your money. I don't really like buying these kind of assets here, because if the story goes wrong, where's the bottom? Uh-oh. I mean, if the story goes wrong, it looks to me like, and isn't that interesting? You see how that's like 40, 50, $50 a share? You see that? Which would be, like usually stocks historically, they're richly valued when they're trading at 3 times book. That's like, I worked for a brokerage firm in the 90s, and it was bought out by a bank, and they paid 3 times book. And all of the shareholders of the brokerage company were very, very happy. 3 times book. So there's book, $23, $24. That would basically be about $75, $80 a share. Would be a really rich takeover bid. And here it is at $625. So very, very concerning. So this is classic growth. And if the Fed keeps saying 0 interest rates, okay. Who knows how high the damn thing will go? You should all be able to do a reload zone off of this. Just even eyeball that. $900 is your high. 0 is your low. So it's 80% of $900. That would be $720, right? So knock $720 off of 900. That'll take you down to 900 minus 720, about I guess about $180 or so, which would be sort of down in here. What a coincidence! Can you guys see? There's actually a price gap sitting right there, right? Because that closed there at $167, and this candle opened up at $171. There's a fucking hole in the charts here of about $5 on a monthly price chart. Anybody have any somebody find that for YouTube audience, somebody find that reference to how often, somebody did a cool blog post years and years and years ago, how often do gaps get filled in? It's a pretty big number. So I'm not saying it's going to go there tomorrow. But what I am saying is there's no fucking way in hell I would ever, 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 ever buy something that looked like that. Couldn't do it. Couldn't do it, couldn't do it, couldn't do it. But that's actually a pretty typical growth story. So there you go. Hey, Kevin, you're Mr. Banker dude, aren't you? Maybe you can help us with how we need to raise this money for Hawaii. I got a feeling you probably have some good ideas. All right. I don't know whether that helped or not, but hopefully I've given you some stuff to think about. Yeah, so growth right now is looking pretty dangerous. Why do you measure the real value of assets against M2 but not against gold? Why do I value something versus M2 but not against gold? I mean, it'd be interesting just to do a nice little side comparison and just see visually whether there are any cues here. Did an interesting study. How does a technical analyst waste time on the weekends? Here is a study that I did of the lumber market. Has anyone seen Useless Token about to get listed? Well, there you go. That makes sense, eh? So, when I study an asset like that versus M2, hopefully you can see the image on the left is what you see at the grocery store. And in this case, I guess it's like, what, Dick's Lumber, or in Canada, what do we have, Rona, right? Your standard of living is collapsing. Simple as that. This just happens to be one product, but, you got your wallet on your hip pocket. It's like $1,000 sitting in your hip pocket. Look at me, man. I'm the man. You want to go and buy some lumber to, fix up the deck or something. 5-6 years ago, you could have gone and bought maybe 5 or 6 boards. Now, you can't even buy one. That is the definition of a collapsing standard of living. It's just as simple as that. This is how societies collapse. The art and the image on that's the left. That is what you see at the grocery store or Dick's Lumber, whatever you want to call it. This is reality. This is actually what the value of the asset actually is. And the irony of it all is lumber prices now are actually much lower than they were back in the 1980s and the 1990s. We're not even anywhere near old historic highs on lumber prices, which is scary, eh? So in real value terms, if this asset was actually trading at new highs, what price would it be in fiat? I can't even imagine. It'd probably be like tens of thousands of dollars. This image here clearly articulates what the 1% have done to us. And there's not a damn thing we can do about it. What's a Zim dollar? I don't even know what that is. Now, it'd be interesting, right, to just out of curiosity, we'll do this side by side. So we'll do the same thing, LBS1 exclamation mark. So there's just your lumber market. I'll put that weekly. And you want to look at lumber versus gold. So LBS1 exclamation divided by GC1 exclamation. Boom. Well, I don't see a hell of a lot of difference. Why? Because the gold price itself has also been heavily manipulated. So, ironically enough, you value an asset versus a commodity versus another commodity, and the whole fucking thing is all fugazied altogether. So it just completely removes all what they've actually done to us here in our society. And interestingly enough, theoretically, these images should be identical. Did I do that right? LB1S divided by M2. Is that how I did that over here? Yeah. So these assets, isn't that interesting? So I guess I made comments here. 16 weeks of bearish. Correction continues. Okay, well, I guess you're seeing a little bit there. So whoever asked that question, and it's not bad. You could use the gold if you wanted to. Looks like it's okay. Where are we here? There. So we'll throw that on there. I mean, you can use it. I'm not going to fault you. I might not invite you to the family Christmas party, but I won't fault you. Just kidding. So, yeah, you want to use the gold metric to help you value assets? I don't have a problem with that. What I would say is just be interesting to compare There, right? I guess that's sort of what you're talking about there. So you can really see it in gold terms. You want to use that? That's fine. Same thing. Yeah. There's got to be some combination between that lumber standard and don't take no wooden nickels. I like that. And that's good. Just goes to show you're listening, man. I like that. So, I don't mind that. I mean, it's doable. You could use gold if you wanted to. If anything, what I would say is I think that gold is undervalued. I think gold really needs to work its way a bit higher here. But you can see that. It's not bad thinking. Question is, how about, are you going to value these things versus silver? That's the question. Okay, let's see how we're doing here. So, number 7. Oh, God, look at it. You guys just keep coming here. What should fundamentalists do during bubbles? Well, I mean, ideally, you just sit in cash and just wait for the insanity to settle down. No idea what you typed there, Roman, but it sure sounded good. So here's the problem, right? Is that market can remain illogical far longer than anyone can remain solvent. So what do you do? I mean, what did Gail Dudak do? I remember that, right? Damn, fucking every single day. NASDAQ just kept going higher day after day after day. And it's the same, now it's the exact opposite end of the cycle. This is the fear asset cycle, and it makes perfect sense. I look out my window, and I see these stupid fucking buildings just keep going up. I'm not going to get sucked into buying one of these places. Liam does need a house. And I'm just saving money as long as I possibly can. And when the market breaks and people sort of get back to realistic living again, and they will, it might take a few years, I don't know. But that's when I will buy that house. So the answer is do nothing. Is it a good time to get the fuck out? I don't know what you're thinking here. Let's see what I got. Virgin Galactic Holdings. I don't know. Oh boy. I mean, it'd be interesting if you did a 50% retracement of this low back up to this high. You might see that could be a 50% retracement. I like 50% retracements. Is this a kind of thing where, oh my goodness, right there, that is the sell signal? That is the one signal that I tell everybody to trade, and you will make $1 million if you just take that one signal? No. I mean, it's a V top off of a V bottom, which is kind of W-y, but I can see this looks really messy down here. Is this a price gap? Is that a gap the whole damn way up there? Is that another gap right there? So, probably what ends up happening, and it kind of sucks, sorry, but I'm just going to say it. One of these days, one of these planes is going to blow up in the middle of the air, and a whole bunch of people are going to die. And then this whole story will go back into the cupboard for another few years. Do not like the idea of chasing that. I would not buy that there. If you did get in there at 16 and change, is it a good idea to sell halves on doubles, establish risk-free trades? I always think that's a good idea. And hell, you could even sell like 3/4 of this at this point and just keep the 1/4, which is totally free and clear. Because you sold 3/4, you should have lots of money to pay your tax bill. Nothing wrong with that strategy. And then, draw reload zones off of these lows, and you want to go throw stink bids off original market structure and gap levels and reload zones. It's not a bad idea. I don't know how many shares you have. You could write a call option against the stock and collect an income for owning the stock. Is this, like I said, is this like cut and dry? This is a signal here for me? No, there is no signal. I don't know. Could go up, could go down. So I don't know whether that answers your question, but hopefully that's given you some food for thought. Brian. Brian, could you please check XHV USD BTC? Jesus Christ, that's a lot. Been monitoring this project for a while, but don't want to chase. Curious to know your TA. XAV. Now, what was the rest of it? XHV. Not even close. Nice try, Brian. XHV. Hey, there we go. Haven Protocol. Hey, it's even on Shitterex. Is that a good sign or a bad sign? I don't know. Versus dollar. Hey, look at that's good. So at least they took the fluff out of this. Oh, I love those. The longer the channel, the bigger the run. I love when you can buy these kind of like, you know. In fact, actually, didn't we start off the video with Wyckoff check? So that's coming down into a really interesting area. I think actually there's a bunch of names, and I think Bitcoin kind of looks the same thing. We won't call this a quote-unquote buy until we actually start breaking and putting in W structure on the other side of this technical top up here. Boom, 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 boom. So, I mean, could you have fun trading this thing all around this? What a huge playground, eh? Just massive. You know, what the hell? This is $6? Could you get a move back to 12 to double your money? That's exactly what that just was, wasn't it? So there probably was somebody who had a bid at 78.6 and actually just got half off on a double right there. And now they're sitting on free asset. Pretty sweet. So, you want to do things nanny nibbles, stink bids, little old lady kind of risk management approach. I don't have a problem. The rule is do not come in above reload zone. So all up here, leave it alone. Now that we're back down in here, and I love this sort of like, I think I want to call this like the sex zone. Because that Kevin guy, he's always talking about how the chicks are so hot for him whenever we get down into here. Right? Is Kevin still here? No, actually, I'm sorry. This is Andre. There's that and Italian oil, man. You know, no wrong. Anyway, Brian being stupid. 78.6. You know how much I love 78.6. Mountain Man, me. I mean, momentum-wise, is there any... Avante! There we go. Michele! Gabella! Sorry. Actually, I don't know, Andre. Do you know Michele? You should come into the day trading group, right? We got Michele in there. Daniele, his alter ego is Michele, and we're always talking about Avanti oil. And I mean, seriously, folks, I mean, you want to know why I'm joking here? This is what I do, and this is what I'll do for the rest of my life. I came in and bought this piece of shit down here. Italian oil. Who the hell goes to Italy for oil? Hey, you tell me. How am I doing on my Italian oil? That's like 20 cents a share. This is $2.90 a share. So everybody should fall in love with Italian oil. Que bella! It's the only Italian I know, but I sound damn good. Sorry. All right, so back to your story. I don't mind any nibbles down here. Don't mind it at all. Don't think this thing's gonna be quote unquote a buy until you see W's on the other side of this trend line. So this might take quite a while, right? This won't even be till the end of the year. And that's that crazy ass fucking end of the year insanity we're looking for. Something big is gonna happen here at the end of the year. Right now, as I said there a moment ago, volume momentum, price momentum, everything is pointing down. We are, approaching oversoldness. So, like I said, stink bids down at really cool levels, awesome. But there's no W's here in momentum. No W's in price. We're below the trend line. So, it's a range market. Bottom end of the range, top end of the range. Range ping pong. I'm probably looking for moves back up top. First stop target, 38.2, which you'll learn in our fibs module. Where is that? Right there. Oh, look where it stopped. I mean, this is so fucking cliche. After a while, I mean, it's ridiculous how cliche this shit gets. So we have a 38.2 Ray Burchett. We used to call him right there. First stop target. You know, Collins pump chaser zone. And I might even in this case call it the dump chaser zone. So if I wanted to short this bear market, I would be concentrating in here. And you notice you can see, remember we said that double price. So some guys were selling half on a double, get a free position. Others were coming in and they were hitting this 38.2, joining the short. I don't like that trade. I wouldn't join that short. I would prefer to be, accumulating down here. So that's the way I look at it. Big hurry up and do nothing. In the short term, I would say probably you're going to get a buy signal when we can get market structure above this trend line. So that might come in something like, that's assuming these lows hold, right? We don't even know if they're going to hold or not, but maybe something like that, right? And you get a buy signal there. So still lots and lots of work to do here. No hurry whatsoever. So whoever asked that question, these are probably the relevant levels. And of course, like I said, in the school program, you'll learn about this in a couple of weeks. So there's not really any hurry. But hopefully that helps you out there, sir. And you're probably like, well, Brian, I'm long, so you telling me that it's not going to the moon just angers me and makes me want to demand a refund. Sure hope not. But, hey, at least I didn't bullshit you. I just sort of gave you exactly what I thought. What time is it? All right. Well, maybe I'll give you another 10 minutes here. Let's see if I can get through another one or two. So, as a beginning with relatively high amount of money, as a beginner with a relatively high amount of money to put in private banking, don't quite understand that. As a beginner with a relative high amount of money to put in private banking, I don't understand that sentence. In case I don't see myself able handle my own money. Wow. It's a good idea to give my money to a European private bank to manage it. It is? I don't know. If not, what is an alternative? I will appreciate your professional opinion. What I would just simply say is, in the short term, all right, take it easy, Andre. I'll take you with Liam. Is that what you're saying there? Oh, you're such a sweetheart. Thank you. I think I understand the question, but I would actually say, to be perfectly honest with you, this is going to be my honest opinion. You ready? You're not going to like this, but here it is. I would say you take your relatively high amount of money, you split it into quarters, and you go and buy a quarter of European 1 year paper, British 1 year paper. Well, maybe, you can do British if you want. Swiss 1 year paper, maybe British, Canadian, Australia, whichever one you like the most, 1 year paper, and American 1 year paper. It's probably going to give you maybe a 0.25%, maybe 0.5%, who knows. But at least your money's going to be there 1 year from now, and that's the most important thing. And you sit there for the next year and you learn. Don't go, the whole reason why you're here is to stop this, right? Give my money to a European private bank to manage it. I mean, the whole reason why you're here is to turn you into a private banker who knows to buy down markets and sell up markets, and who knows appropriate risk management strategies. not to go and just hand that job off to somebody else. I mean, that's why you're here. You've obviously taken the level 1 course, so you're already a third of the way through. So my suggestion to you is just focus. You've got this 1 year. Go and put your money in guaranteed investments. Buy a CD. It's called a certificate of deposit. It means that when you go and request that money, it is still there. Or you could buy a GIC, a guaranteed investment certificate. You can even buy inflation-linked notes that are GICs. Like I said, you could buy 1 year government paper. So the governments of these societies will guarantee your investment. I don't think you throw all of it at one government. Hell, you could probably even get a half decent yield if you just go and buy some good quality, like AAA quality corporate paper. Just 1 year. And spend the next year learning. Show me those 100 paper trades that Grim wants you to do. I guarantee you, whoever asked this question, I guarantee you, if you do those 100 paper trades, logged, journaled, diarized, I don't care whether you make any money on the trades or not. In fact, I would prefer that you lose money. So you can say, well, you know what? This is how you don't want to do this in the future. Because that's how you lose money. You're here to learn that. So learn it. I mean, God's brought you here. Jojo said to me 7 years ago, Brian, just do me a favor, would you? Just try and help these people. You're not really that good of a husband. You're not that good of a father. But you're okay with money. So, you just do me a favor and try and help these people. That's why you're here. You're here to, in this 1 year, put your fucking nose to the grindstone, do what we tell you to do, and you won't need those private bankers. Ever again. For the rest of your life, you can tell them to go to hell. But for the next year, you're asking my opinion, just fucking put your money in there. Just put it in a guaranteed investment and just let it sit there for 1 year. Which would probably be really hard for you to drive you crazy. Anyway, that's my answer for you. Okay, in the library, there are resources on candlestick patterns, harmonic patterns, and chart patterns. For those patterns, does it make sense to memorize them and use flashcards, for instance? Generally, what's worth memorizing in terms of TA patterns? My suggestion to you, you're in the education program, just do what we ask you to do. Over time, you are going to recognize one pattern over another. Is it constructive to waste your time building flashcards of the different chart patterns and get really good at spitting out the names of candlestick patterns on cue? I would rather you practice 3 unrelated reasons for a trade. What does a good log entry look like? Where I entered, where I was going to risk to, where I'm going to take profits. What's the setup I'm using? Get really good at cut and pasting charts into spreadsheets. And make that, like those kind of tools, bulletproof. That's where I'd rather you invest your time and effort. Being able to spit out a chart pattern's definition and name on cue, that's okay, but it's not really going to make you money. The most important thing about making money is all about controlling yourself and your behavior. So you really have to get into the process of that process. Build a trading plan, 3 unrelated reasons, appropriate risk management, log everything religiously, diarize religiously, so like 5 years from now you can come back and look at the trade and know exactly what's going on, know exactly what you did right, know exactly what you did wrong. Really monitor yourself, monitor your behavior, monitor your anxiety. build daily checklists of sort of your routine. How am I going to approach research? How am I going to approach actual managing the actual capital I'm working with? Those kind of things. All about the process, right? And building your plan. Being able to spit out the names of candlestick patterns on cue is not going to make you any more of a professional trader than learning and understanding the process. And really, I would rather you spend your time practicing things like just paper trading. I mean, I know a lot of people on the site have a very hard time doing this. But just simply saying, okay, Beamish talked about this thing being in a half-decent trade location. All right, boom, we just went and bought. Beamish says that you should probably try and do 2-to-1 risk-reward to make sure that if you're right on the trade, you get paid twice as much as when you're wrong. All right, well, let's adjust this to 2-to-1. All right, so then Beamish says, all right, take a shot of that, throw it in your diary, and now write all this up. Where did I enter? Where am I going to risk to? How do I feel? What's the fundamental story? And then you are now trading. It's as simple as that. And you just got to do this. And like Grim says, do this 100 times. And then you think you can actually get to the point where you can actually seriously start thinking about risking money. That's the shit you got to practice. All right, hope that helps answer that question. All right. Last question, and then I'm off to Liam. So, hello, Brian. In the level 1 course, you say that we are at the end of the fear cycle and beginning the green cycle. Greed. Not green, greed. Close. This means that stocks should be at the bottom, showing up move, and commodities should be at the top, ready to go down. Yeah. Yes and no. Yeah. But if I look at SPY, this looks like a top, not like a bottom. Well, do you remember? You got it. You got to learn this shit. Question is, are you looking at the asset versus Fakazi, or are you looking at the asset versus realsies? If you're looking at the asset versus Fakazi, everything looks up. I mean, they've pulled off the con. It's beautiful what they've done. It's a total, as Jamie Dimon says about Bitcoin, which is total nonsense. But this is a total fraud. This asset up here, that's not really, it doesn't look like that. I mean, the reality of our economy and our current situation is, if you take into the account the money printing, well, this is what our stock market looks like. So, I don't know. I don't see new highs there. I see the start of, holy shit, this could be one hell of a bull market ahead of us. This was the baby boomers greed cycle. This is the baby boomers fear cycle. And I honestly believe we're heading into, this is your millennial generation. This is your greed cycle. So should be a pretty big bull market ahead of us. And unfortunately, thanks to people like Ben Bernanke, who basically came in right about here and said, oh, we better change the rules and the way that the public sees this, or else we're fucked. And so they went in and they just they broke the number one cardinal rule that you are not supposed to break when it comes to managing economies. And that is they fucked with the currency supply. So they've gone and fucked with it. You think, and the public thinks, that this is what stocks look like. But in reality, that's not true. It sucks. I don't know. The problem is that you're sitting there going, well, Brian, that's your opinion. Great. So fucking what? It sucks because I was wondering how they were going to deal with this. Because really, this is what things should have looked like coming out of this cycle. And I do believe this is what we have in front of us. And you can see it happening. Housing prices, commodity prices, stock prices, everything's going to be going up like this. You can see it happening. It's starting. Problem is, it's so difficult to see this, right? I mean, if we look at lumber prices, like I showed you there just a few minutes ago, you know, what is real and what is BS? That's real, and that does have a bit of a bottom working. I mean, it's not terrible. I would actually expect this to underperform now for the next little while. But you could even make the argument from, say, 2000, right? Because there is the dot-com boom. This market actually should have gone that direction. So it's actually a little bit opposite what it's supposed to have done. Maybe it's playing catch-up now. That could be. I do think to a certain degree that the Americans kind of got away with something here this past cycle. And in a weird sort of way, I think the market is finally playing catch-up. That the Americans kind of got away with a con job. This was supposed to be a deflationary cycle. So it's tough to comment on this. It's going to be damn difficult to navigate our way through. All I would say, and also too, to add insult to injury, these banksters have heard that the politicians and stuff are starting to clue into the fact that this versus M2 money supply, the assets are actually worthless in reality versus M2. That, yeah, Mr. Ben Bernanke did fuck with the money supply. And so as a result, this is the world that we live in. Thank you very much, 1%. Our standard of livings are getting absolutely decimated through this. What I found interesting, though, is there are some places in the world that are going through that deflationary cycle right now. So if anything, they're really lucky. Most of the people in Western civilization, our standard of living should be collapsing here, and they are. So, sucks. So, I'm not going to say this is easy. Whoever asked this question here, I'm not going to say this is easy, and it's going to be very difficult to see. And you want to see how difficult this is, go and look at Ben Bernanke, the way that he was acting when he went in front of the U.S. Congress to promote this quantitative easing bullshit. He was scared shitless. You can see it in his face. You can hear it in his voice. I think that the U.S. issued too many bonds. They were bad bonds. They were garbage. They sold them to the Chinese, and the Chinese just said, if you don't take these bad bonds off our hands, we are going to dump them in the marketplace, and your country is going to go bankrupt. Simple as that. So all the bankers scrambled around, came up with this quantitative easing concept, and in essence, all it was is we're going to print money, we'll buy those bad bonds right back off of you, and we'll put those bad bonds over there. And they're just sitting in the corner. They're still alive. They're not going anywhere. They are just sitting there. And, of course, the amount of currency that's outstanding has been exploded higher to give the Chinese back the money and get those bonds out of the Chinese hands. That's what I think happened through that whole 2008, 2009. Yeah, they call it quantitative easing, great financial crisis. That's all a con job. I think it was just simply the Chinese said, hey, you take these things off our hands or we're going to dump them in the market. And now, interestingly enough, we're actually hearing that the U.S. Federal Reserve is now, in their great wisdom, has said, well, because the economy is a little bit better and things aren't so bad, well, now we're going to start tapering our bond purchases, i.e., they bought all of the bad bonds off of the Chinese and the various different international participants. Where's that chart? I should probably go over here. Here we are. And I do this on the Monday to Friday videos. So I personally think that this bond market is actually at like a 30, 40 year inflection point. And of course, good old capitalists, they don't give you the data prior to the year 2000, so how can you make head or tail out of this? But I believe that this is a massive head and shoulders. It's a 35-year change in interest rates. You can kind of see, up, down against this neckline. We should have this nice little, and that's what that sort of forecast was, counter trend rally. And then this is what I actually think is going to happen this fall. And this is what's going to destroy the international markets, is this move down here. So I still think a little bit of up, and then into sort of that, what does Q4 GDP data is supposed to be like, just through the roof. And the Fed has come out and said, well, we're going to start tapering our bond purchases. Yeah, wonderful. There's nobody in that. And actually, I was talking about this on the Friday free video to YouTube. There's the tick flow data coming from international purchases for years and years and years, especially when the euro was just getting going. The tick flow data into treasuries, people were just piling their money into the United States. And then, of course, Cold War, Eastern Europe, people took their money out of Eastern Europe, piled it into U.S. treasuries, piled it in the U.S. dollar, right? And that trend was going on for a very long time. But if you look at the international tick flow data now, actually it's negative. So now we have a situation where if the Fed actually stops their guaranteed purchases of U.S. Treasury bonds, there's nobody buying bonds. Who the fuck's going to buy a bond now? I.e., interest rates can go up quite a bit. And I think that's what's going to happen. That's what killed the Canadian real estate market in the early 80s. Exact same point in the cycle. And I think it'll be what kills the Canadian real estate market this go round too. So, anyway, we'll see how it goes. All right, so I think I got through all the questions. About 1:30 here. Let's, just as a dovetail for this, let's maybe take a, Kevin, if you can remind me, we'll take a look at some of these charts. For Remy Bricka, we'll take a look at some of these and just do any further commentary tomorrow. But on balance, hopefully I've given you some stuff to think about for this question. So, all right, I think I'm going to leave it at that. It's about 1:30. I got to get off my ass and get over to Liam. So everybody wish me luck with Liam. Sure hope you enjoyed that offering over there on YouTube. It was a little bit different. While we have the school on it, it's probably a little bit confusing for you guys. I hope you enjoyed the funny rants from Brian. Brian's such a weirdo, eh? But, just trying to make a positive difference in this world. And, let's all just try and work together. Somehow, we got to get through this fucking Fugazi, the Joey Diamonds and shit on our heads. There's no way out of it. They own us, fuckers. Buy your Bitcoins, right? Just problem is wait for the W's, please. You'd be surprised. You just wait for the W's and it keeps you out of so much trouble. Also try and hunt some value. In the crypto space, it's going to be tough finding value right now. I am going to admit that because prices all across the board have been zipped up. So my hunch is probably got to wait for some W's. We just got to let the market settle down a little bit here. So. Okay, thank you so much for the best wishes for Liam. Great job, level 1ers. Keep on keeping on. Level 2ers, working with Kiran. Great to see you guys just humming along. And Marat, level 3ers, working with Zach and I. Great to see you guys just kicking ass. TRI SOFers are kicking ass. TRI day trading rooms kicking ass. Sjord's dashboard is rocking and rolling. The Hawaii project is up and running. We'll see how it goes with talking with the lawyers, see if we can jump through some hoops, get that going. So there's lots of stuff hopping and jumping over at TRI. And, of course, we are doing some trading, too. If there is something that's a buy, damn well Brian will be all over it. And I thought it was kind of interesting that I never did talk to you guys in it, but I am quite interested in that little warrant of Zach's. And it's interesting because the only thing that's holding me back is it's in China. So it's like, oh, Jesus, do I really want to go down this goddamn rabbit hole? But wow, key reversals down at the bottom end of ranges. It's an interesting story. So, we'll probably talk a little bit about this tomorrow morning in the daily brief. So, okay, everybody, have yourselves a great day. PMA for the win. All the best, and bye for now.